What is going on, everybody, and welcome on into the stream. Today we are going to be going live as the Federal Reserve minutes are about to be posted, and we're about to dive into some of that. And we're also going to have the press conference, and Jerome Powell is going to talk about what the Fed is up to these days and the plans for interest rates, tapering, all that good stuff. So we're going to be going live as we get the reaction from the market. So it might be, it's going to be a little bit longer than usual, about almost probably 2.5 hours roughly. We're going to probably be live for. So buckle up, but it should be a fun stream because we have seen some crazy volatility on these days in the past when we get the Fed meeting, right? The FOMC. So these are usually wild days. What I have done, it's kind of an interesting way to play it. I have played it two different ways. I sold one, but I actually have two SPY calls left that expire on Friday, okay? Those are $5 out of the money. They're 445s, okay? I just bought one. I'm probably going to buy one more of these, and these are SPY puts. And we actually have 15 minutes, so I might grab one more right now. And these are SPY puts that expire today, okay? These are 435 strikes. So I'm expecting, and what I'm going to do right now is I'm actually going to grab one more. And what's going to happen here is I'm expecting some craziness into this meeting. And so we've been seeing some wild reactions up and down. And usually the first reaction is the wrong reaction, but that could change, of course. And what I mean by that is what the market does initially, once we finally get the information, once we finally get the minutes, once that info comes out and the headlines are put on CNBC and they're all over the place, we've been getting these reactions, right, where all of a sudden the market pulls back and then it rips, or it pops up and then it dumps. And so that's what I'm looking to play that reaction kind of both ways. And so one of these positions will be cut fairly quick once we get the direction. And that's really it. So these SPY calls, I took profits on one of those contracts. And if we go higher and this news is digested well, then I'm going to hold those other two. Maybe I'll sell one into a pop or a spike today and hold one more because they expire Friday. I'm expecting potentially some continuation. And if not, we have these puts that I'm grabbing right now for that dump potentially today if we get the dump. I don't know if we're going to get it, but I'm looking to grab one more of those. So it's a smaller hedge almost in a sense, I guess. And that's how I'd recommend going about it, is hedging yourself through this. But if we get a quick overreaction, what I'm going to do is I'm going to set some limit orders on this. So I'm going to set a limit sell up in the upper ones. So I'm buying these puts right now for roughly, the first one I got 142. I'm trying to get one at under 140, but I don't know if that will fill. So I'm going to probably have to get in relatively soon because we got about 15 minutes till the meeting minutes are released. But if this can get filled, that'd be great. I'll have two with a rough average of 140. Let's see if it gets filled right now. It should get filled. It's really close. We're on the bid right now, so we should be very, very close. There it is. We're filled. So we now have an average of 141 on these. What I'm going to do immediately is I am going to sell one of these at 175. Okay. So I'm just going to look to take profits quickly at 175 if we get a quick spike down. Potentially at the initial reaction or leading up. We could get some crazy volatility leading up to this, and that's really it. And then ultimately, right, whatever happens, we'll make that decision of cutting the calls, cutting the puts, and what are we going to do. So that's how I am going to at least play it, and I think that's probably the smart way to do it. You can play it a bunch of different ways. Obviously, if you have longs, just grab a put or two for this week, and if it ends up that those don't need to be utilized and they end up losing on you, but they shouldn't be a big position size, then great, you were hedged and you don't have to worry. So you can at least go into the meeting and not feel like, oh my gosh, or just do nothing. You could just do nothing and not worry about it, because I don't think it's really a huge deal in the grand scheme, unless some crazy news drops, which I really also don't think is going to happen either, but we'll see. We shall see. So a lot of really interesting stuff today. So we gapped up yesterday. It was really the sentiment shift was on the earnings of Microsoft. Let's go over to Microsoft. Actually, let's go to QQQ first. Here's some tech plays. This is really good because we kind of saw yesterday, right? We got up to this point right here, 350. We got rejected at 351 and we sold off. The market closed. We were like right around, what was it? Yesterday's close on QQQ was 345. So we closed like right in here. And then within the first hour or two, really, it was like an hour of the after hours action, Microsoft reports their earnings, number one, that happened. But within that first hour of that after hours action, this plummets. And QQQ was down, the S&P was down about 1% in the after hours, the first hour of after hours trading. So it continued that pull, that downturn, which usually we haven't seen, to be honest, these moves in the after hours as much, right? Then Microsoft gets on the conference call. They had their conference call, and that was digested very, very well. So a lot of tech names followed Microsoft. Look at this. Here's Microsoft stock. It dumps at the initial earnings, okay? They actually beat on EPS and revenue. And then I think they had some guidance in there that people were a little concerned about. And so this is kind of what it does for like an hour, right? Kind of just chops, and then boom, it bounces right back. And now Microsoft actually went green, and today it's up almost 5%. It was actually up, where was it? It was up more at the open. It hit 308, which is pretty crazy. And so Microsoft popped 5% today, and it seemed like a lot of stocks fell long. If you look at Apple stock, here's AAPL. Look what happened here. Sell off. And then guess what? It bounced back and went straight up in the after hours yesterday. Why and when? That was when Microsoft bounced. So it literally played the exact same thing and did the exact same thing as Microsoft. Like, they all followed along. So a lot of names, a lot of tech stocks, a lot of stuff played along with that. And that sentiment, in my opinion, was what drove some of the sentiment shift. And we got a big sentiment shift right there because all of a sudden Microsoft earnings, we didn't plummet, and it was actually not that bad in terms of the stock reaction. And all of a sudden it's like, wait a second, this is a buyable opportunity. And people started buying in. People had the confidence, in a sense, to buy in. Whether that is a viable opportunity, or whether it is a good decision in the next couple of months or weeks, we'll see. But that's kind of all it really was. It was a sentiment shift, in my opinion. And the next sentiment shift could be very much digested in the next 10 minutes. Or at least will begin to be digested in the next 10 minutes. So let's take a look at SPY. I'll go to the 1-minute chart and we'll see. I don't like to use the 1-minute chart, but what we can see right now is we are coiling up. So the range is tightening up here on the S&P. You guys can see that I have it played multiple different ways. I have calls, I have puts. The puts are the hedge. Obviously the calls, I took profits on one of those and I have 2 left. So if I know that those aren't going to go in the money, I'll just cut those off. They expire Friday. The puts they expire today. So if we get a crazy reaction down, then I just take profits on the puts. And that's it, which is the plan. That is the plan. LABU, I'm in those. Those are killing it. Absolutely killing it. Thanks. I mean, I really, all I ask on the videos is a thumbs up. That's all we ask. So I appreciate you guys for watching. All we ask, thumbs up button, and subscribe if you're interested for more videos. I'm going to be doing these lives 3 times a week, roughly. Actually, Sunday, I guess if you include Sunday, it's 4 times a week. But I think we've been having a lot of fun, and they've been fun to kind of just, talk through what's going on and seeing stuff. LABU, I took profits on 1/3 of my position, but look at this absolute monster. This is the 3 times the bull ETF for biotech, essentially, right? So XBI, if you think about XBI, I like XBI, and we've been talking about XBI for a while, but LABU put in the bottom on Monday. I don't want to say luckily, but I kind of got lucky in terms of the timing, where I bought that dip on LABU. I bought 3 calls, $20 strike price here, and I bought a 17 strike in my Robinhood account, which is funny enough, that account's actually up pretty big today. Which has to do with a little bit of this, a little bit of SPY calls that I had from yesterday, and so a little bit of everything. But I sold one, and now I have 2 $20 calls right here, LABU. These are currently running at 445. The bid's at 410. Ask is at 440. So like 425 probably is what the actual what you can probably get filled at roughly. On LABU. But these are nice. I mean, I'm in at 210, so I'm up over 100% on those already, but they expire in March. So I have no worries on this at all. And if this Fed meeting gets digested well, I would expect a bigger run on biotechs. As I've been saying, as it is, I think LABU can go back to 40 very realistically. I think 30 is a decent, conservative, I would say, bet. It is a bet, though. Again, the Fed can change, and this can all change today. So we're going to see what happens today. But again, if this goes to 30, these $20 strikes are going to be worth $10 intrinsic. I mean, I bought them for 2. So that's why I played it this way. You could play XBI, and you could probably feel better about going heavier on that because it's not going to be as volatile. This is much more volatile. But if you can time the bottom, which potentially I tried to do by thinking that Monday was the bottom, but it may not, depending upon today, then this is going to be a monster. And so I locked one in. So realistically, the risk here is very minimal because I've already locked one in for gains. So we're good to go there. I mean, it was nice, and I'm going to ride that to March, ideally, or at least, until we hit 30 or 40 or so, if that's what happens, which would be sick as well. All right, here's SPY. So SPY kind of coming out of the range. It's seemingly, that range was tightening up. Now we're breaking up a little bit to the upside. You're going to get the minutes in literally 5 minutes, so we'll see what happens from the Fed. But again, that doesn't necessarily mean that it's over, because Powell, I believe, is going to have, I believe he has a press conference, I believe, at 2:30 Eastern. So the minutes come out at 2 p.m. We'll check on that. We'll see the headlines, and we'll read all that stuff, and we'll see the reaction. I'm primarily focused on the reaction because I think we kind of know what's going to be said, to be honest, for the most part. The reaction will be really interesting to see in terms of the market and how stocks kind of respond to that. And then Powell will have his press conference where he'll be getting asked questions and whatnot. And so if there are things that are said in there that the market likes, doesn't like, that could be taken different ways. I don't think that there really will, but I think the biggest reaction is probably going to come from the initial release. And then I feel like it's one of those things where the market has been feeling kind of uncertain. And once this might be behind us, this could kind of lighten up in terms of that uncertainty. And so we'll see how it goes. We'll see. Okay, let's see. LABU would be talking about that one. I think is going to be great. But I am already in I'm in from like $5 lower on those calls. So, I played calls instead of shares just because I could play with a little bit less size. I risked a couple. I think I was in with a 210 average for 3. So I risked like $650, but that 650 could turn into like, 1,500 to 2,000, depending upon how long I ride it out. And if it goes the way I think it's going to go, I got 2 months on that still though. Plug for longer term swing support, 1890, 200 EMA. Let's take a look at Plug. I definitely think Plug is a great one. If we get the rebound in the market, look at how much it's sold off. And this thing did bounce really, really nice. It bounced really nice with Blink and ChargePoint a few months back in October. I had a really good run from October through like November, where these all many of them almost doubled. So now you're much lower. And if you can hold in the 18s now on Plug, or really hold above $20, Plug up to 30, I think, is a very realistic target. Now, again, it could go for more if the market is very, very strong, but Plug to $30, I think, is a realistic target, which would be a nice return from here. 45%, which would be really nice. Below this, though, $14 is my at least level to the downside that I'm watching. Whole friend circle subscribe. Appreciate it. Appreciate that. That is awesome. Let's go back to SPY. We have 4 minutes. 4 minutes until this news. Actually, let's take a look at here's the daily chart on SPY. Let's see. Let me zoom in a little bit. Here's the daily on SPY. We'll look at how SPY does, how the Dow does. The Dow is not up as much, which is kind of expected. Boeing is, I think, weighing that down today, too. They had earnings. And then the NASDAQ is up 2.5%. So it's kind of like what we're seeing, at least from what I could tell, is kind of like a bounce day, very much, where the stuff that's been beaten down the most is bouncing the most, and the stuff that hasn't been beaten down as much isn't bouncing as much. Hence the Dow being only up, just under 1%, and the NASDAQ up 2.5% today. And we'll see if that continuation, or we get that continuation. So SPY, I'm looking up to I think 450 would be the next, interesting level of resistance if we do get, come out of this meeting today and all as well. So 450 is kind of the target that I have for the next area to think about as resistance. But we shall see. CFVI. Let's see. This is that SPAC, right? As it's kind of sitting up here, this one's kind of a sympathy, right? It runs with DWAC and all that stuff, right? So this is kind of sitting right here at like 1150. If it can hold this 50 SMA, which it did last time, see how it held that blue line, that 50 period moving average, really, really nice. If it can hold bodies of the candlesticks above that on the daily, I would say that it's fine. If it can't, and this starts to kind of crack, just be careful because it can come down a lot. We've seen a lot of SPACs get killed, right? Get destroyed. So it's something to at least make sure we're watching. Okay. Fundamental long-term opinion on GME, considering Ryan Cohen. I don't know. Personally, I would have to look into. I haven't looked into it, to be honest with you. Fundamental long-term, I guess I would imagine if we just take a look at like finviz.com. Let's go to Finviz really quick. And let me look at just some numbers. I don't know about the potential growth and stuff there, that in the possibilities they have, but Their price of sales is not terrible, at least if this is accurate from FinViz. It's potentially under $100. Might not be terrible given the situation of no debt and how they took advantage and whatnot of the run. I'm not necessarily a huge fan, though. I think that it's going to be kind of correlated to a lot of those short squeeze stocks. Just my, 2 cents. I don't know, though. I would have to look into it deeper. I personally haven't looked very, very deep into GME before. Now, back pandemic time, right, this was at $20. Not saying that $20 may be the fair value. I think it has maybe some more in it. But under $100 starts to get potentially a little bit more interesting if you do like the future potential that they have, which I don't know. I haven't looked enough into it personally to say that I love it or I don't. So I don't know. All right, let's see here. What do we got? SPY. Let's see. We're going to get this reaction. I think we're going to have to... We'll see what happens here. If this tanks super hard, I'm going to get out of those puts really, really quick. Let's just see what it does. Let's see what we got. Minute should be coming out any minute, and we'll dive into it, and we'll get the reaction and all that stuff. Alrighty. Here it goes. Market is ripping. Usually the first reaction, though, is not the direction that the market has gone in the past. Let's just see. It is going straight up, though. SPY is going absolutely straight up. We went from 440 on SPY. Let's just see how this is going to be taken now, because in the past, the first initial reaction is the wrong direction. So if we do drop below VWAP, if we do drop below 440 on SPY, that's kind of that level of like, okay, now wait a second, things are turning the other direction. But we're seeing some volatility for sure. I am probably going to cut one of these. I have one of these calls. Actually I have two. I'm going to dump one right here while I have a chance here at 410. Oh, now it's whipping down different directions. I'm just going to put that 410 sell in case. Look at how wild this is, though. All right, the spreads are going nuts. Okay, so initial reaction is up, right? Popped up, and then it's pulled back a little bit, but it's pretty wild. It's pretty wild. All right, so those calls just sold. I had one of those. Now I have one left. I have one 445 call left. And if this holds VWAP, then what I'm going to do is I'm going to cut those puts. They were just a hedge, so we're going to cut those puts as the hedge. And the rest of my portfolio is long, so I'm not really, is it a big deal? The puts, I lost maybe like 50 to 100 bucks in those. Okay, whatever. The rest of the portfolio is going to be up way more anyway, so that's the reason for the hedge if we did dump. But if we hold up here, this could be looking pretty good. I'm going to give it a few minutes, and then we'll cut those puts if we keep holding up here. SNDL picked up 1,000. Yeah, we can talk about that in a second. Let's just see how this reaction goes the next few minutes, and we'll go from there. Federal Reserve keeps the funds rate unchanged at 0 to 0.25, so no change in rates. FOMC will complete monthly bond buying taper in early March. It will soon be appropriate to raise Fed funds rate. The U.S. economy continued to improve, but pandemic weighing on activity. Okay, let's get rid of these puts because these are essentially going to be worthless, and we might as well just salvage what we have. And of course, let's just dump these bad boys. Like 63, it's fine, I don't care. At least we can salvage something out of that. Okay, those are out. So now we have our calls. SPY calls. Look at these are killing. Look at these. These are my SPY calls that I had. I had 3. I now only have 1 left just to ride this thing, but it's insane. SPY's up 2%. Hit 444, and we're going for more here. Dow's now up 1.5. NASDAQ is almost up 3.5%. Look at this. QQQ, guys, look at this. Absolutely insane. QQQ straight up after the minutes. So they essentially said they were going to complete their monthly bond buying taper in early March. It is soon appropriate to raise interest rates. Now, they didn't say exactly when. I may get some more clarity on that in the next couple of minutes and when they have the press conference and all that good stuff. The economy continues to improve, but the pandemic is weighing on the activity right now. So let's see. That's what we have for now. We'll come back to that. We'll dive deeper into that in a few minutes, but it's pretty crazy to see everything just going straight up. And usually what we kind of had is those initial reactions up and down. We would get a wick up, and then we get just a plummet down. So let's see if this plays out the same way, or if we kind of hold this VWAP. Roughly 440 or so is kind of that level. If we start falling below the VWAP, which is right here at like 440.50, then that potentially could signal a bigger move down. But it seems like after these crazy spikes to the upside, it seems like buyers are coming back in for now. We hit 444 on the highs. We're about $1.50 off of the high on the day on the S&P for now. All right, let's go check some other stuff. XBI, how did biotech take that one? Biotech reaction, yeah, a little popping out. It's pulling back, but it's still up a good bit. So you guys know that I have LABU calls out to March, and that is looking juicy. Let's take a look at these. These are going for 430 by 460, so those are up. I'm up well over 100% already on those, which is killer. Now we'll see how SPY handles the rest of the day. This could be, I don't know if we're necessarily going to close like, up for, if we're going to go to like 450, if this is going to be a straight up move, but all it really kind of means is if these dips get bought up and we kind of trend higher and we see higher lows throughout the afternoon, that's really kind of what I'm looking to see. If we get that type of move and it's not just like a straight up move, then I think people are going to start feeling a lot more confident about buying the dip in the coming sessions, and you might start seeing a decent bounce off the bottoms for some of these names. As we probably already have the past like 2 days, but you'll probably see that continuation, which everyone's looking to see, that continuation movement. The S&P, by the way, is at it's right at the 200 SMA on the daily. So over like, if we can get up over and close over like 443, that's a pretty big sign, at least closing over the 200 SMA, because it was our first dip below the 200 SMA since the pandemic. And, now we if we can kind of, build strength above that now and kind of bounce and get back up into the 450 range, that would be a pretty good sign, at least just bigger picture view, looking at the daily chart on the S&P. Let's talk about some other stuff now. So we'll go into that. I'll if I see some more stuff come out, I will, of course, talk about it. Okay, U.S. federal funds rate, or U.S. federal funds futures still imply 4 rate hikes in 2022 after the Fed statement. So they're still expecting roughly four rate hikes in 2022. That's the expectation. Here's the 5-minute chart look at SPY. So this is probably a better view. I don't like using the 1 minute because it can be pretty wicky and pretty wild. But the way that I like using the 5 minute a lot more, but the 1 minute was kind of useful for the initial reaction, because usually we kind of get that initial spike or drop and then opposite way. In this case today, though, we didn't get that. We got a big move up, and so far it's been holding higher lows, and now it's kind of trending higher. So we didn't get that fake out from the Fed, which is interesting. Let's see. SNDL. Let's go to SNDL and talk about that guy. Personally here, I'm not a huge fan of SNDL, but as from a swing trade approach in a market that starts to heat up, I definitely am not opposed to playing this again personally, and I wouldn't be potentially opposed to the idea of it. So roughly right here, it's got to get back over 50 cents. That's our kind of our next area to watch. Let's look at some of their numbers. I think Tilray had earnings recently, and their earnings were not that bad. The problem with SNDL though is I believe it is technically, as we speak, they've done a lot of offerings and whatnot in the past. Technically, they're pretty overvalued even now. And the issue that I have with some of these cannabis companies is that a lot of these Canadian companies are not as good in a sense, profitable, as strong in terms of projection and whatnot. They're not as good as a lot of the U.S. companies. The problem with the U.S. companies is that a lot of them are in the OTC. So the way you get access to those, either you go to the OTC and buy those in individual companies, or you go to MSOS. Here's the kind of the cannabis ETF, where this owns a lot of those OTC stocks that you may not have access to unless you have a broker that allows you to buy OTCs. So personally, I like MSOS a lot more. Look at this massive downtrend destruction. The only problem with this is that a lot of it relies on policy. And so you kind of need, the government policy to align. And if the government policy doesn't align, then it's like, okay, what's going on here? And then you're not going to get much action. And so that's kind of what we've been dealing with. We kind of get these little, false senses of, oh, it's coming. And then it falls back off is what it seems like. But for the longer term, I love this ETF as a great way to play. I would rather just go buy the individual companies, like pick my favorite 3 or 3 to 5, and just make a little, mini portfolio of just like cannabis companies. Even go onto M1 Finance and make a little pie. Obviously you can't with the OTCs. If they weren't OTC, then it would be great. I would just go do that with OTCs in an OTC portfolio. Either get I forget. Charles Schwab allows you to buy OTCs. TD Ameritrade allows OTCs. I'm pretty sure Trade Zero. There's a bunch of brokers. Just look up which broker allows you to buy OTCs and go into the MSOS ETF and pick your favorite few companies or just pick up your favorite, few OTC cannabis companies. I think Planet 13 is another one as well. It's an OTC. And just, I would say those are going to be solid longer term holds. You have to have a longer term view on them, right? You can't just think about buy them now and bounce. That's why personally I'm not in this, because I like it, but in the short term, I like the XBI play. So I like the biotech bounce better because of how oversold biotech's got. So I played LABU calls, and so I'm essentially playing, XBI in a sense, thinking that XBI gets back up over $100, and if it does, LABU probably goes $25-$30, and then it's probably a really nice play. So that's kind of what I'm looking at, and maybe it goes for more, and so I'll ride this up. Ultimately, I'll just be putting a trailing stop loss on at some point, and that's it. I'll just ride this. So hit over $21 today. If you go back a couple of days, I think I bought it when it was like 16-ish. I bought my calls, the $20 calls. So they were out of the money. Now they're in the money, which is like 2 days later, which is wild. But $15 is a low. Now you're up over 20. It's because it's a 3 times bull ETF. So, you're getting that leverage, which I would recommend, to be honest. I'd just recommend just going with shares. But, if you want to play options, depending upon your sizing and your risk tolerance and all that good stuff. All right, let's see what we got going on here. So SPY is kind of just, hit 444, then it's bouncing back down to 442. So it's got like a $2 range for now. Now it's bouncing back up to almost 443. That's our range for now. Let's see if I can pull up any more information on the side here. So we talked about how they imply 4 rate hikes still in 2022. Directed desk to increase some holdings of Treasury securities at least $20 billion during the monthly purchase, February 14th. Not much other information, at least as of now. Let's go over to CNBC. Here's what changed in the new Fed statement. Let's just dive into this a little bit really quick. They're comparing this statement to the one that they got on the 15th, so last month. Text removed from the December statement is in a red line, or the red strike. So they removed. This is the stuff that they removed from last month's statement. Let's just dive into these 2 pages right here, which is kind of cool. The Federal Reserve is committed to using its full range of tools to support the U.S. economy in this challenging time, thereby promoting its maximum employment and price stability goals. So this is no longer in the new report. With progress on vaccinations and a strong policy to support indicators. Okay, so that's no longer in it. So it's essentially the report where the minutes start out with this. Indicators of economic activity and employment have continued to strengthen. The sectors most adversely affected by the pandemic have improved in recent months, but are being affected by the recent sharp rise in COVID-19 cases. Job gains have been solid. So this is all the same stuff we had last time. Let's look at some more of the red down here. Okay, here we go. So with inflation well above 2, last report they said with inflation having exceeded 2%. Now they're just saying with inflation well above 2%. And a strong labor market, the committee expects it will soon be appropriate to raise the target range. Let's see. For the federal funds rate. So they cut out a lot of that information right there. They cut out until labor market conditions have reached levels consistent with the committee's. So they cut out all that. They think it's coming soon. So, when soon is, I think a lot of people believe March, but again, who knows exactly when soon is. The committee decided to continue to reduce the monthly pace of its net asset purchases. Let's see, bringing them, they didn't say by how much, bringing them to an end in early March. They're going to be ending that in March. Beginning in February, so it used to be January, as of last report, the committee will increase its holdings of Treasury securities by at least $20 billion per month and of agency mortgage-backed securities by at least $10 billion per month. Okay, they cut out this entire little sentence right here. The committee judges that similar reductions in the pace of net asset purchases will likely be appropriate each month, but it is prepared to adjust the pace of purchases if warranted by changes in the economic outlook. They took that out. Same thing. And then they have all this stuff down here. So that's it. So it's pretty much, honestly, I don't think there's anything super unexpected there. They just kind of reworded things a little bit. And that's essentially it. Expecting 4 rate hikes this year is essentially what the expectation is for now. And expecting to raise interest rates soon, but they didn't say exactly when. So that's what we have so far. Here's SPY. SPY come back down to view up. Just look at that. SPY right back into view up, right back into range. So now we'll see if this continues or if we fall through to the downside. Pretty interesting. stock. You went ahead and sold my Apple and Costco 4% before. And that's probably a good idea. That's probably a good idea. Already up 50% on SNDL since bottom swing. It's due to policy. Yeah, exactly. I mean, that's really what it comes down to in my view. And I think that it's been kind of just, slow on that front in terms of policy. So, all right, so now we're coming down to the range report. Now we're pulling back here. SPY is down under under the VWAP, which is like roughly under 441. We'll see if this continues and this thing pulls back. Now it's really pulling back here. Oh, wow, it's dumping right now. SPY is dumping. Let's take a look at QQQ. Let's look at the Qs. I want to look at the 5-minute chart on the Qs. This is tech. Tech is honestly going to be a little more volatile, I think, than SPY. So QQQ was up like 3-something%. Now it's coming back down almost to the lows of the day. Look at that. Wow. Let's see. Nothing else popping up on the stream yet in terms of news. But Powell, I think, is coming on in like 10 and 15 minutes or so is when he's coming on to have his little press conference. And then we'll see what he says during the press conference and if anything, comes out of that. But across the board, there were some pretty big movers today. If we look at like I think DraftKings was a fun one. We'll see if things hold up roughly here. But it's kind of like we're kind of right into range where if it doesn't bounce here, we could be seeing some downside. DKNG had a really nice day. I think it was on the top gainer list. It was at one point. It was up nicely on the top gainer list, but it's pulled back obviously since now the pullback, I guess, in terms of the Fed. Okay, so here we go. DKNG. Well, it's still up 12%. DraftKings, I think people are saying, hey, now it's making a move into the playoffs and the Super Bowl timeframe and all that stuff. Do I buy that? Yes and no. I mean, maybe that's kind of a sentiment kind of shifter or a gauge, but I don't think it's to be honest, a big pull in either direction realistically for DraftKings. People always try to get excited about things like that, but I don't know. The sports betting sector in general has been doing pretty well. Look at Penn today. Penn was crazy. Penn was up over 22% from the Monday lows to the highs this morning, which is pretty wild. Apple and Costco 4%. That was nice. The thing is that we've been noticing too, and maybe this meeting kind of changes that for the near term. We'll see. But we've been noticing it's just like any reaction is just met by the opposite. Like we kind of see like look at that. We kind of had that reaction up, and then now we're kind of seeing the dump down. So it's just so choppy. The lows of the day though on the S&P, we're still up 1%. So you'd have to come down pretty good for this thing to go red, which it could do easily. The lows of the day are roughly at like 437.50. So under 437.50, this probably goes and tests red. Probably tests going red. So if it does drop below that level, I'm curious how the options are looking, how the pricing is on these things. Let's see. It's pretty much, honestly, a lot of the volatility, a lot of that juice, some of it came out of these options, but still, to be honest, they're not. Let's see what these are today's expiration. Let's go to like Friday's expiration. I have one of those calls left, but we're going to ride those. Probably, I sold 2 of them, so I'm going to ride that last one to Friday. Probably, unless we get a clear dump today, and then I know it's not going to have any chance, and the time decay is not worth holding. But I'll probably hold that as long as we finish up over 1% up today. I'll probably hold that one at least one more day, potentially more. But yeah, nothing. I mean, honestly, nothing crazy there. I bought yesterday. Kind of I don't want to say a wild bet, but I bought these. 500 strike SPY calls for June 17th expiration. Sounds wild, sounds ridiculous, but I bought 2 I got an average of 195 on those. It's at like 2 something, but these are going to be these are like, I don't want to say lottery picks because it's like, hey, if you think the market's going to go higher, then these are a decent bet. But ultimately, right, as we get closer and closer to that date, it'll tell me, hey, do I get out? Do I trim one off or whatever? Depending on how far we're up or down or whatever into that. But that's kind of what I'm looking at. I just bought that as a somewhat of a lottery pick, but where I'm kind of basing some of that thought process off of is our friend over here. Let's go pull him up. We were talking about him on the last 2 live streams, just because he's been an interesting kind of follow, or at least forecast wise. David Hunter, right? We're talking about his forecasts and whatnot. And of course, do I always think it's good to just look at one person's opinion? No, absolutely not. Definitely not. But he has a forecast right here. of a 600 on SPY, 6,000 on the S&P. He thinks NASDAQ is going to 20,000. He thinks the Dow is going to 4,500 or 45,000 and the Russell to 3,000. So if you do the math on some of that, that's absolutely insane. But he believes we have entered or we're going to start the melt up phase, the final stage of this longer term bull market we've been in. And he thinks it's going to be kind of finalized by this crazy melt up stage where all of a sudden, not all of a sudden, but where things are going to just kind of melt higher, go parabolic, and then kind of crash later on this year. That's his expectation. He has been pretty accurate in terms of this bottom. If the bottom is in, he called that bottom, pretty close. So we'll see how it plays out. But that's kind of his expectation is 600 on SPY essentially, or his forecast for now. That could change. So I got those 500s. Personally, for me, I like to be buying the fear, playing the opposite way anyway. So I like that. And hey, if we go up and SPY makes a push back up to our all-time highs, those calls will probably do pretty well. It just that has to happen in the next like 2-3 months. If it starts taking too long, I'll just get out of those. And it's probably, or I could just hold them, I guess, because, I spent, what is it, like $400? If it goes to zero worthless, what do I really care if it does at the end of the day? All right, let's see. Got puts expiring March 18th, mostly banks waiting for a drop in interest rates. We'll see. Let's take a look at JP Morgan. Let's see how the banks are doing. Wells Fargo has been super strong. JP Morgan's up today. Yeah, it's up off the bottom, off the lows, up about 1%. Let's see how it reacted from the Fed. Same thing, pop and drop, and then now it's kind of consolidating. WFC is Wells Fargo. Let's see how Wells Fargo kind of similar thing, pop and drop, and it's holding though. It's still holding. It didn't go a lot of the stocks here. The S&P so far, I believe the NASDAQ, none of this stuff has gone to the new lows of the day. So while it had a quick spike, they've held this morning's lows after, it gapped up, pulled back a little bit, and then kind of grinded. They've held those lows. So things are honestly, just kind of doing their thing. And hey, this is kind of, I think we're seeing some of the volatility come out. And if we kind of just consolidate or kind of grind the rest of the day, that would kind of probably, in my guess, signal a bigger move up in the coming days, if I had to guess. I was kind of expecting, if we're going to see downside, I was kind of expecting this to be the reason, or the sell-off, sell the news or sell into the Fed news. But if we don't really sell off too hard into the close, then honestly, this might just be like, a float higher type of situation the rest of the week, or kind of a consolidate, because we've had some crazy action. Usually you'll see on crazy weeks in the market, up or down, doesn't matter. And we kind of have been. We were down, now we're back up a little bit from the lows and whatnot. In crazy weeks like this, the last couple of days could just simply be days where we get that theta decay, that time decay. It just burns your options. So if you have options expiring this week, and you're kind of like, should I trim them? Maybe it bounces, maybe it comes back, whatever. There's a good chance the next 2 days are not big volatile days. But we'll see. That doesn't necessarily mean that they won't be. It's a good chance they're not going to be very volatile days, based on kind of how this has played out in the past. Puts that expire. Let's see. I'm looking at. I don't have any puts now. I was looking at some of these. Some of the small caps I'm looking at too are just absolutely it's just dead, and there is nothing at all going on. It's like there is no volume there, but the past couple of days we have been seeing some decent moves. So EBON is one that this is an old runner. This thing, you got to go back to go back to early last year. This thing was a crazy runner with Bitcoin and all that stuff. And short squeeze, they had short reports come out on them, and the thing hit 70 cents as the low. Off those lows, it's up 30. Well, now it's actually up more than that. It's just today alone, it's up 37%. From those lows, it is up 60%. Pretty interesting, pretty wild move back to the outside. But we're seeing, a little bit of that type of action. XELA, I think someone mentioned that on the stream recently, hit 34.50 or hit 0.345 as the low. Hit 75 cents in pre-market. So this thing bounced. Let's see, that's what is that? That's well over 100%, right? Yeah, it popped over 100% from the bottom. So we're seeing more of these. I like this play because it was a prior kind of short squeeze candidate, and it was kind of a crazy one in the past. So I personally like XELA, not now, but I if this does pull back in the coming days and maybe next week or so, if this pulls back and then starts building, maybe it holds over 50 cents and it builds higher lows, or it holds 50, I would be interested in potentially looking at that as a play for a secondary kind of squeeze out if it holds up. So I'm kind of watching that, and it didn't even hit the 50 SMA. 50 SMA on this thing is at $1. So I think it can go to $1 pretty, I don't want to say easily, but if it does hold up and kind of hold a good chunk of this move up, it's one that I'd be looking at possibly for a short-term swing type of idea. I haven't been looking, to be honest, too much at some of the trending or recent small caps. You know, they've just been kind of like all over the place. Meanwhile, GameStop is up 15% today. So it's holding a nice little move. We haven't really had a consistent runner. We've kind of have today across the board, some meme stocks pushing up. Cost is up, 23%. GameStop's up 15%. AMC, let's see, where's AMC right now? But it's kind of like, it's not like a super concentrated move up and down really across a lot of these things. I'm waiting for more of a concentrated move or a clear sector kind of, I guess, view. Whether we get like a biotech that runs, whether we get some sort of maybe therapeutic play that runs off of some news, or there's some sort of news that runs and some sympathies follow. We haven't really had that in a long time in small cap land, many months it seems like. So I'm kind of waiting for something like that to happen, or we got to get one runner to ignite the fire. So that's what I'm kind of looking, and I don't want to say waiting for, I'm not hoping for it, but we're kind of looking for that type of thing before you can kind of see a lot more momentum back in small cap land. So we'll see. Powell should start talking in like 5 minutes or so. And so if we get anything interesting out of that, we'll obviously talk about it. But SPY bouncing around and doing its thing. So far, right, initial reaction after the minutes get released, pops, right? We popped up about $4 or so, about $3 in SPY. Then dumped off. We dumped off about $6. We popped 3, dumped 6. Didn't go to the lows of the day, and now we're pushing back up, and we're trying to bounce from the lows, or from the recent lows a few minutes ago. We're up like, $3-4 again. So it's just been like, that same volatility is just playing around and doing its thing. All right, let's see if we can go and check. I'm curious what we got over here on FinViz in terms of the market. Okay, so today, pretty green across the board. Way more advancers and decliners, but still, it's funny though. Even though we have 76% of stocks advancing versus like less than 20 declining, look at this. We still have 78 stocks hitting new highs, but 135 hitting new lows. So it's still, under the surface, we still have that pressure down for a lot of names. And I'm curious to see if this meeting maybe changes that thought process or narrative. So now we kind of know what's going on in terms of the Fed. They're expecting 4 rate hikes this year in 2022. They didn't say exactly when so far, but they are expecting, or at least we are expecting, a potential or a rate hike soon. They didn't say when yet, but it just said soon in the notes, in the minutes. And that's all we have as of now. We're getting a rate hike soon. Okay, cool. When? No, I think everyone's expecting March. Some people were I wouldn't say expecting, but some people were thinking, what if it happens today? It didn't happen today, but if it did, then it's going to be pretty nuts. It would have been nuts. Let's see. We have these SPY calls are pushing back up a little bit too with the market here. Let's take a look at QQQ. I'm primarily focused on the reaction based on the market right now. We kind of are going to get the same deal in terms of Powell and stuff. I don't have right now. I guess I should look into doing that in the future, of building out capabilities to stream it from my computer. I've tried in the past and I've had like issues with that. So I haven't messed with that. So I'm not able to like stream it as of right now, and get it so that like my mic will also work and also Powell's, or pull like a video up also working. I have to work on that technical difficulties. Some degree, I'm technically challenged in that sense, even though, I grew up in the generation of, technology and computers. But that's something that I looked into it a couple months ago, and then I got to I hit a wall on OBS, and then that's what the software I use for streaming. I hit a wall on it, and then I just I don't want to say I gave up, but I just stopped. It just was busy, and I just stopped doing it. Stopped trying, at least, I guess, on that front. But I should get back. I should try to do that, because it could be cool to do like a live stream for okay, there's some video I want to play or pull this up, rather than just look at the actual meeting notes, right, that we just pulled up. So this is what we pulled up before. This is cool on CNBC. They had, when they literally just pulled up this right here, and they just pretty much compared last meeting's notes, or I guess text, to this meeting's, and then they kind of showed you what they changed. It was just some small wording changes, really, for those who are coming in, who are looking at it now. I didn't see this before. We read through the whole thing, but it was some small wording changes, to be honest. Nothing, I guess, unexpected in here, and that's really it. They did say in terms of rate hikes, they just said that it's coming soon, and that's really it. They decided to keep the target range of 0 to 0.25% and all that stuff, and they expect it soon to be appropriate to raise the target range. So last statement, last minutes, right, from December, their sentence read, the committee expects it will be appropriate to raise or to target, whatever, to raise, maintain until the labor conditions have reached level. So the wording went from they expect to maintain this federal funds rate to they expect it will soon be appropriate to raise the rate. So that's the wording change really on that front, which I guess everyone knows it's coming at some point. So I don't really, again, that's kind of what's happening. And the reaction, right? We had the pop, pullback, and now we're getting a pop again. So we're getting a bounce back up. At least market-wise. So SPY is back at 441.50. Here's the QQQs. We're looking at 353.75. And it was really interesting. QQQ had this line right here at 350. This would have been it could have been a good day trade twice. I think I played it like very, very small size. Initially, right, we had the lows of pre-market kind of were up around like that 350, but I had this line in here from the past. So I had this line roughly at like this level right here, 350.44. That was the lows we saw back in October. So that was my resistance zone, which we kind of had so much volatility, it didn't really matter. And now we're holding above that. So that 350, we dipped just below and came right back above. That 350 on the QQQs is kind of that sentiment shift, in my opinion. Under that, bearish. Above that, bulls are in control, at least for now. So we're kind of teetering along that level, but we held it so far again this afternoon. So as long as we hold above that, it seems like, dip buyers are still, comfortable at least buying back in, or at least, buyers are coming back in to some degree. And let's see, Powell's meeting is starting on up. We'll see if we get any good quotes out of that. A lot of people like to ask him some stuff, and what they'll do is, they'll word things certain ways and all that, and get his. He's really cool. I feel like under the pressure from the stuff that I've seen, videos I've seen of him, under the pressure, he's pretty cool and calm, collective when he handles these questions and stuff. So I don't expect him to say anything wild. I don't expect him to say anything that people don't, or people, take out of context, really. I think it's pretty straightforward in terms of when he talks, what happens, or at least what he says, what he means, and it's pretty straightforward, at least for now. All right, let's see. I wanted to pull up a couple other things here too. So I wanted to see how ARK is doing. So Kathy Wood and her ARK ETF, how are they doing? Let's take a look at broader view here. They bounced. They're up 3% today. Monday, this hit somebody bought this thing for $64.98. Okay, you could have bought this thing for $64.98 when it was trading less than a year ago. Okay, let's go back to those highs. It was trading for $159.70. Now, I know the problem with this Kathy Wood here, I think for a lot of people and investors, and I guess one of the issues people really have with her is that if you kind of run a fund like this, you realistically, for a professional, right, you shouldn't see this type of movement in your fund, or you should have been able to kind of correct what you're doing or your allocations before you kind of got this wild action. And so that's kind of a lot of the concern that people have. And people are like, okay, well, I understand that you're down a lot. Maybe this is a good dip buying, or maybe this is a good buying opportunity. And she still says it is, so she hasn't really changed her course too much, at least as of yet. She goes through like phases where she's like active on Twitter, and then she kind of takes a couple of days or weeks off, and then she'll post something and then she won't. And I think she was just live recently talking about Bitcoin and crypto and stuff. She's still a firm believer in that and the growth there at some point, next couple of, 5-10 years, her outlook. She has, I guess, I think her target was like next 5-10 years, $500,000 on Bitcoin, which, by the way, we should see how Bitcoin reacted to the Fed. Bitcoin's had some wild reactions too to the Fed. Let's take a look at this. Same thing. It's funny how Bitcoin, honestly, is very, very correlated to tech stocks and to the market right now. It's like it's doing the same exact thing, right? It was kind of trending up all day, popped quickly on that Fed news with the market, pulled back with the market. Now it's kind of, trying to regain some. It's like, honestly, it's like Bitcoin is another one of those, is another thing like SPY or like QQQ or like the NASDAQ or like the Dow, right? It's the same thing in a sense, Bitcoin, right? they're all kind of moving in sync until we get a really big disconnect, which I've been saying is I think a good thing. But until we get a big disconnect, they're all moving in sync to some degree. Let's see. Let's go back to SPY really quick. And so we dipped a little bit down, but we still haven't hit those lows from earlier, from a few minutes ago. We had the initial up and down reaction. So Powell says, Omicron expected to drop off rapidly. Wages are rising at a fast pace, at the fastest pace in many years. Again, stuff we already know. Inflation remains well above our long-run goal. Again, we kind of know that, and we kind of have seen that coming in a sense, right? The Treasury 10-year has risen to a session high of 1.8. That's going to be interesting to see if the 10-year gets over 2. Let's go take a look at the 10-year. I wanted to pull that up because that has been fun to see. Here's the 10-year. So let's see what the 10-year's done over the past little bit today. Look at these ads. I literally hate like how many ads. A lot of these sites these days just have just ridiculous amounts of ads. It's just wild. Okay, so here's the daily on this. So the 10-year got up about a week or so ago, 10 days ago. It got up to, where is this, about 1.86 and 1.87 almost. It did dip back down a good bit, down to about 1.75, and then now it's pushing back up a little bit to 1.815. So we'll see how long that holds up. I think a lot of people will still expect this to go over 2. I think it will certainly go over 2. I'm just curious to see how the market plays with this. Usually, when this is elevated, the market's kind of gotten some crazier little pullback reactions, knee jerks up and down on big moves in the 10-year. But let's see. Oh wow! Now we've hit at least relative lows from the reaction from the Fed on SPY. So SPY just dipped below. Just the volatility here has been nuts. Absolutely nuts in terms of this up and down. If you're trading options, if you've been watching or at least trading options in some of the ranges we've seen, or just off of these crazy reactions up and down, the volatility has been insane as of late, for sure. So let's see if it holds up here. And the lows of the day are still down here to 437.50. We're still about about $1.50 off of that level. So I would expect, if we can keep holding up here, unless Powell says something wild, it's probably going to hold up. But again, who knows? Powell says economy no longer need sustained high levels of policy support. It's going to be the same. Again, like kind of my whole thing with this whole Powell stuff and the Fed. It's literally going to be the same thing, and then eventually they're going to be. Everyone who was so worried about rates and inflation, right? What's going to happen is at least my guess, or at least my whatever, right? You're going to see like all these reactions up and down. So you have one day it's, oh my gosh, the Fed, inflation, this and that, and raising rates. And then it gets digested. And then all of a sudden the Fed is, 6 to 12 months from now, things change again and everyone's flipping back and forth. And you get these crazy reactions. So these are good, I guess, for volatility, but a lot of it is noise. Ultimately, having a feel for, okay, rates are going up. What does that generally mean in history? And we know that it's not the end of the world, right? It's really not the end of the world. In the past, we can even go find it too. I was looking recently in the past couple of weeks, what the market returns have been when we see, rates pop up. And usually what happens, at least just on the surface, bigger picture view, usually what we see is we see these wild moves. We tend to see big dips and drawdowns early on, and then leading up to those rate increases. And then after the first one or two or whatever happens, then the market stabilizes and it kind of handles itself once it kind of realizes what's going to go on, and then it bounces back and actually it performs pretty decently. So rising rates isn't a terrible thing for the market realistically if you just look at historical trends and historical numbers and stuff. So I mean, that's what the history tells us. It's not a huge deal. Powell, we have not made decisions on timing and pace of shrinking the balance sheet. So again, nothing kind of new there. That was the last thing he's mentioned, at least so far. 37.50. This is the lows of the morning. If you wanted to take a stab, I would say if we do, I don't know. It's been the range. We can kind of look at this VWAP area as kind of a sentiment shifter too. It's just like, look at this. So you have this quick pop up, right? Puts there obviously would have paid very, very nice in a short period of time. Dip back below VWAP, got it back above, bounced back up. Look at these candlesticks. This is a 1 minute chart too, guys, by the way. So look at this. Let's see. We still got about 20 seconds left in this candle. This candle has gone from 439.40 to 441, now 441.20. So almost a $2 move on the S&P in a minute candlestick. Now we literally just hit a $2 move in a 1 minute candlestick. I mean, like, this is just nuts. Like, and then we've had times where nothing happens, like where we've had just barcoding, it seems like, in super, super slow action. And I would expect, to be honest, I would expect some of that tomorrow and Friday. I really expect a lot of that volatility to kind of slow down. Maybe the VIX and stuff stays relatively elevated. It may start to kind of fade back off, but I think it may stay relatively elevated in the near term, unless we kind of rip back up to highs and go up, over 445 today on SPY and close up that high, which we could easily do. Maybe that's what happens. But I'd expect that volatility, at least in terms of like the ups and downs, the wild swings we've been seeing intraday or, day to day in terms of the S&P and the NASDAQ and whatever. I think a lot of that's going to really cool off in the next 2 days. So that's at least my projection. And there's probably a lot of contracts, calls and puts. You can look at spreads and we can even take a peek, and I might take a stab because we have a lot of opportunity here. We can go look at some vertical. Let's take a look at that. Let's look at some vertical spreads. Let's look at some call spreads. If I wanted to kind of, play this volatility here, let's see. The bid and ask are really huge, so there's still a big spread in the bid and ask. But if I wanted to play this, let's just look at some of these. Let's go to the chart. Let's go to order entry right here. Let me click on this guy. Okay, so if I went to the graph, and I'm looking at the 438 by 439 call spread. Yeah, it's probably a little bit... it's almost half and half, almost 50-50. If I went down a little bit more, let's say I went for the 436 by 437. If the market, if SPY closes the week above 437, essentially I hit max profit, right, on these. But like, you can play this or play puts, and you're gonna capitalize, potentially you'll be able to capitalize on some of that theta decay that we have to worry about. So all you're worried about when you play verticals, all you're worried about is your two levels, okay? So your bottom level and your top level of your spread. So in this case, this is going to be a debit spread, and we're buying 10 calls at 436 and we're selling 10 calls at 437. So these 436 are going to be more expensive. And in this situation, these 436s, it's going to cost us more than selling these. So we're going to net having to pay like 58 cents is what it's telling me right now. That's our net, kind of like we got to pay that out of pocket. And then what's going to happen here is, as long as we close over 437, we hit the max profit. In this case, it's $420 for 10 contracts. And if we close under 436, we hit our max loss of $580 for 10 contracts. So if you believe we still close the week on the S&P over 437, or even over 436, you think we're going to close higher, volatility aside, you can take a position on these, and you don't have to worry about playing calls or puts. Well, you're technically playing calls, but in this case, if I was to buy a call and I bought the 437 calls, right? These calls, right, as long as we finish over that level, yeah, they're going to have value, but I could lose because they're really inflated in terms of time decay, or in terms of theta decay that we're going to see the next 2 days, and in terms of how volatile things have been. There is a lot of extrinsic value which is factored in to these options and to these premiums. And with a ton of extrinsic value we're seeing, there's so much opportunity for people to kind of play that theta decay and capitalize on that. And so this is one way to do it. You don't have to worry about, you just have to worry about your levels. That's it. No noise, no, oh my, the option's so expensive, what do I do? It's like, okay, well, look at my levels and that's it. That's all you got to worry about. So the chop continues. Again, we just hit that, we popped up, hit that 442 level, and then we're back down into the sub 440. So we're just bouncing around. All right, let's see. I'm going to go back through Powell's quotes here. Fed can't predict. No decisions were made on the timing and pace of the shrinking of the balance sheet. We've already talked about that. Powell says Fed can't predict what monetary policy path will be amid uncertainty. Broad agreement on FOMC will be soon made to raise rates, or soon be made in time to raise rates. So once they have that broad agreement, that's when they're going to do it. So I guess everyone's expectation is still March, but again, that could change. Powell doesn't rule out raising rates at every FOMC meeting. Okay, I guess that's, well, now look at that. SPY's pulling back off of that little quote. Powell says there is quite a bit of room to raise interest rates. So we're seeing that. I guess that's pulling us down here. Look at this chart. It's just nuts. Go to the 5-minute chart. It's a lot more fatter candles. The 1-minute chart's just insane volatility-wise. So, okay, 437.50 is the lows of the day. We got close. Under that, I think we can see this test going red. That's at least what my guess is if we drop under the lows from this morning, we may test going red, which the previous close is at 434.50. So that's probably going to be about a $3 pullback, potentially down towards here, or a possible test if we do go and test those lows. But in the meantime, we're just chopping around and we're just seeing some craziness across the board. What else do we have here? Pen, SPY put position there. I might add one more of those if we do drop further. I have 500 calls out to June. A very, very small position on those. But I may add to that if we do drop out a little bit further today. Let's see how Bitcoin's doing, by the way. Bitcoin is, look at Bitcoin's chart. It didn't actually drop as much as we saw. Like, we're not going down to new lows on the I guess the recent, past couple hours on Bitcoin, but we're playing the same just kind of consolidation and shopping around on Bitcoin. All right, meanwhile, SPY has just gone below the lows of the day. So it's still up on the day. It's now only up about 0.67%. So it just went below this morning's lows that we saw. Pretty wild. So if you played this and you looked at taking that initial reaction as the wrong direction, it worked again. So that initial reaction was the calls, right? Where's that move up? And then boom, puts paid. Now puts are paying. Look at this. Let's go ahead and take a look at these single options. Let's look at these strikes on the puts, or at least what the puts are worth right now. So 435 puts for today are now worth over $2. Still out of the money, so these are gonna decay very, very fast if we can't drop under that 435, which we'll see if we can. Look at how straight down that is. This is the 1-minute chart. I don't like it because of how crazy it is. So if you're playing like a stock for a trade or whatever, it's just like it's not worth playing the volatility on this thing. It's just too much. But I mean, look at that. Just absolute straight down move. And now you're probably going to see this thing recover back up. But now if we stay below 437.50, so we're about almost $2 below that. If we stay below this level, which we can draw a little line on for today's chart, I would say we are probably, that's our resistance now. It was support. We cracked below very, very fast below that level. And now we're just dumping off. U.S. Treasury yields extend and raise. 10 years popping up. The 10-year keeps pushing up even more. Let's go back to the 10-year. Yeah, we looked at this a few minutes ago, and it was at 1.81, I believe. Now it's at almost 1.85. The 10-year is pushing up pretty nice. Pretty nice. Looks like potentially what we may be seeing now on this is we may be looking at, I don't know why my chart's all screwed up on this. Let's look at QQQ. My SPY chart's all messed up from like a massive wick yesterday, which wasn't even like happening. Didn't even happen. So the lows on QQQ from Monday are 434.15. We're still way off of that, but look at this big drop down now. We're way off those lows, but I mean, we'll see how this plays out. We could potentially come down and try to go maybe towards yesterday's lows, potentially. 442 could be the next level. $5 drop from here on QQQ, possible. They're all holding up. The Dow has gone red, though. The Dow just went red. So look at the Dow. This has gone red now on the day. But the S&P is barely holding on green, and the NASDAQ is still decently green. But look at the S&P. Look what we said. Like, hey, this is probably going to test going red to green, or green to red after that drop down under there. And what's it doing? It's literally right hovering around, almost going red on the day. So I would say it could go way lower. But if you took a trade like that, I would be taking profits into that move to the downside here, because it could easily bounce back up and snap back up, and it's at 440 in 20 minutes. Like how crazy volatile this stuff has been. But it pretty much did exactly what we said. Under the low of the day, it's probably going to test going red, and it's hovering on borderline going red right now. U.S. Treasury 2-year yield hits highest rate since late February 2020, last at 1.08. That's the 2-year yield, not the 10-year. The 10-year is what everyone likes to talk about. TWAC. Powell says financial conditions matter to the extent they have implication for Fed's two goals. So now you're getting a lot of quotes, and he's probably getting asked a lot of questions and whatnot, like he kind of like he generally does. Look at this LABU. I might be able to add this back by the end of the week. Look at this. So I had $20 calls. I sold one today. Luckily, not luckily, but I sold one I think like earlier in the afternoon. These are now going for. I sold it at $4.20. Is what I sold it for. I'm not sure why there's like these crazy wicks. The charts are all screwed up. I have an average at 210, so I'm still up really nice in that. I might honestly buy that one back. If we do see more downside this week on LABU, I still like it. I still like that one. So here's SPY. So SPY literally did the exact thing. The previous close on SPY, look at how crazy this is. The previous close on SPY was 434.47. So far today's low is 434.46, and that's where we got a small bounce, and we'll see if it holds. But it's trying to hold, staying green, but I think we're seeing some more pressure. This could easily drop below and go red on the day. Wow. So the same thing, the same exact thing has happened yet again in terms of Powell's, or at least the Fed meeting again. Initial reaction was the wrong reaction. Now we're getting more of a build, or at least pullback, or at least building trend to the downside as of late. DraftKings, let's say look at DraftKings. DraftKings was up a lot today, and it was up like 15%. DKNG is DraftKings. DK. It's still up. It's still holding up 9%, which is pretty good. I would say if you're looking at a possible bounce zone, if we do bounce, it's honestly just not, to my opinion, it's just too volatile that I would say it's not worth it unless you're playing super small size. This could be a zone for a possible support bounce. If DraftKings comes down under $21, I would risk it down to about $20.50. So that could be a zone to look at possibly going long on some calls for a bounce back. If it comes into that range, it's got to come into that range though for me to like it. Although it is teetering on the lows of the day, so maybe it holds support here at 21 because when it opened up today, it opened up and held 21 as support and then bounced. So maybe that's where it holds up too. So I don't know. I guess either you can play it, I guess, a bunch of different ways. But I mean, I like zones. I like averaging in. I don't like just buying a position at one time and saying, okay, this is it. I like buying a position, averaging into my position with a risk down to a certain level. And I'll add my final add at that level. And if it can't hold that level, I get out. That's kind of how I like to do it. It keeps my average. It keeps your average low, generally speaking. Powell will make decision whether to raise rates at March meetings. So that's what he said. That's his last quote. Is they will make a decision whether. So essentially the same thing. But now I think that's what everyone's expecting, that March raise. So I think the stage is now set. We'll see. The S&P just bounced really, really nice off that. No, look at that. So maybe the market's taking that as a good thing. Look at this bounce. It's insane. It could be taken as a good thing because Powell now didn't say they're going to raise, but they're going to make that decision on whether they're going to raise in March at that meeting. So now we got the stage is set for the March meeting, right? Powell says again, we are of a mind to raise rates at March meeting. We have our eye on risks around the world, but the economy should hold up, is what he said. So they're looking to raise at March. And so that sets the stage for March. Everyone probably is going to expect the raise. They're going to see some more. Well, there'll be some more volatility again, right? It'll be the same situation. Volatility. And then if they do, okay, we kind of knew that. If they don't, what happens now, right? Like then they're going to see, that's when we got the crazy reactions. Again, this meeting, we kind of knew it was coming. Market's still up for now. We'll see where we close. If we end up closing up over 440, that would be really impressive based on where we just went. But we didn't really get too much out of this so far that like we didn't already know, but it's kind of the same deal across the board. And so another thing too, I think this is a good timing to talk about too. Maybe maybe we go lower this week. Maybe we don't. Again, do I know? Do you guys know? I mean, no one knows, right? At the end of the day, what happens all of a sudden tonight? There could be some massive news out of Russia, and all of a sudden the markets tank tomorrow. You know what I mean? But or maybe there's not. And it's the opposite. But again, right? You can't time things, and it's a challenge because when you try to time getting in, getting out of longer term holdings to save a few percent, to save yourself a little bit here and there, right? The problem with that is in the after hours and the overnight is honestly, that's when you see some of the craziest moves. So that's where you can miss out. Like today is a perfect example, right? Where if you, let's say, bought in, I'll go to QQQ, on some, or actually we can just use like Microsoft, or let's just look at Apple. I'll look at Apple as an example. Look at Apple's just dump, and then now it's bouncing super, super crazy. If you're so concerned about saving a few percent, right, and you want to time the bottom or time getting in, getting out, obviously the Fed's situation. So let's just, I don't want to say like discount that second half of the day, but like if you didn't buy Apple yesterday because you think there was more downside, right? And then all of a sudden overnight, Apple gaps up. So you could have bought Apple, sub 160. Now Apple today is up here 162, 163. I actually hit over 164. What most people end up doing is they'll end up panic buying back in because they thought that we can see downside, and they end up missing the bottom because no one really can time that bottom, right? Obviously, you can kind of have your speculation as to when it is, and I think a lot of speculation was that, hey, Monday was that bottom because we just saw everything just tank, and we honestly we didn't get that close, but people were thinking like limit down. We're going to go limit down today. Is the market going to go limit down? So we kind of had these crazy moves up and down, and unless you timed it on Monday and bought in, as of now, you didn't buy the bottom. And so you missed out on, from the literal bottom to now, you're 3% off that. So again, not a big deal. But if you think about 3% over the course of your lifetime, compound that, it could be a lot, right? So it's why it's just not worth jumping in, jumping out, jumping in, jumping out. Have a hedge. If you think that there's more downside in the market, okay, buy a put to March. Buy some March puts. And now you're hedged. If we do fall further, you roll those put profits. You take the puts off, you take those profits, and you roll it into your longer term holdings to average down. I mean, that's just one way that I think is the most logical way, in my opinion, to play that. But trying to jump in and jump out with of stocks, I think is just stupid. It's a recipe for disaster. Not disaster, but it's a recipe for, to underperform the market. I mean, and the goal is, if you're picking stocks, to outperform the market. So why would you want to underperform the market if your goal is to outperform, right? Let's see. Anything else? Nothing else from Powell yet, really, honestly. We just kind of talk about some of his headlines, I guess, quotes and whatever, what he's been saying. I'm going to try in the future to get it so that we can stream. So in the future, we can stream stuff off the computer. The problem is that I have done that in the past, and I've had issues mic-wise. So it's like either you can't hear it or you can hear it, then this mic cuts out, then the computer cuts out. So it's a mess. So I'll hopefully have that figured out in the near future so we can do that. But as of now, we have to just go off what we have here. So I was mostly more concerned anyway of the reaction. Look at this, the 10-year. The 10-year yield is now at 1.85. This is up a good bit today. Up about almost 7 cents today. Now it is 7 cents. There it is. It's 1.855. This is when we came on, it was like 1.8-ish, 1.81. Was it a little bit lower than that actually earlier today? I think that's bounced nice. I want to go back to this and see how advanced versus decliners looks now. So still across the board, even though with the choppiness, the Dow is red slightly, the Nasdaq is green the most, and the S&P is a little bit more green. With that said, we still are seeing 71% of stocks advancing versus 25% declining. Still though, 152 hitting new lows versus 80 hitting new highs. We're still seeing that pressure. And then the SMAs, man, these are just killers. A lot of stocks with a lot of room to go before regaining that 50 SMA. We'll see if that can end up happening in the near term, but I think it seems like for now, a lot of stocks are holding below those levels. S&P literally came down like right to that red to green like level right at yesterday's close, and then it's bounced so far from there, but pressure may be on unless it can get back up over these lows from earlier, which is at this 437.50 is kind of a key area to watch. If we get above that and start to kind of hold up and volume starts to slow down a little bit and we start to kind of slow down in terms of volatility, we'll probably be safe to say we're going to close green. But I wouldn't say that we're not safe to say that at all. We still got an hour to go, and based on how volatile things have been, I doubt it. It's safe to say that, at least as of now. All right, new quote from Powell. Powell says, "It's time to stop asset purchases, and then at appropriate time, we'll shrink the balance sheet. We want reduction to be orderly and predictable." there you go. I wonder if the market will take that as a good thing. Fed balance sheet is much bigger than it needs to be. Same thing we already know. Them saying that they want it to be predictable is kind of, in a sense, trying to, I don't want to say it's trying. It's not their intent. Again, their intention is not to save the stock market first. That's really not the intention of the Fed. People need to understand that. Like, okay, yeah, there's big implications with what the Fed does in the stock market, but it doesn't mean that, hey, the Fed is going to come to the rescue and save the stock market if the stock market's plummeting. Like if we were like limit down, or if it was Monday and we're plummeting off a cliff and the Fed had a meeting, like they're not going to, like their intention in that meeting is not to, okay, let's stop the market from tanking. There's not, the meeting in it of itself is going to kind of ultimately, pull back some uncertainty. So the market will take that uncertainty away, right? Or at least we'll relieve that uncertainty. And that's generally a good thing for the market, but doesn't necessarily mean that, hey, it's going to bounce or it's going to, go up or down, whatever. The Fed's doing that. And Powell says inflation risks are still to the upside in my view. Should I get out of my HG 350 put expiring this week? Let's see. Where is this? That pulled back. If the market firms up here and we get back and we start firming up, I would just play it with the market right now. Most of the talks, Powell will be off the stand here in very, very shortly. We got the minutes. There's not much more that's going to come out, unless he says something ridiculous. There's not much more that's going to come out. So honestly, the market may just stabilize from here. And so I don't know if we're going to see a bigger move down. And again, the Home Depot puts, take a look at this chart. The market's very, very similar. It's borderline going red to green or green to red here on Home Depot, but we'll see how this plays out here. But again, so far, it's putting in higher lows. So if we dropped below yesterday's lows, I would say that could be more pressure to the downside. Obviously, overnight, who knows what's going to happen. But right now, the trend is, even though we did dip below this morning's lows, we still haven't gone below yesterday's lows in the S&P, on the QQQs, on Home Depot. So the trend, to be honest with you guys, is still moving up. And this potentially could be a buyable dip opportunity based on this past week so far. It's only Wednesday, but based on that, until we drop and make a new low, at least compared to the prior day, we're still trending up. So you can't really, in a sense, you can't really fight that until that changes. And that may change in the overall market here. Let's take a look at how SPY is doing. That could change, but as of now, it has not. So here's SPY. 434.41 is the low of the day, which we're very, very close to hitting. So we may hit that. Let's go over look at QQQ really quick. QQQ is still green by the most, at least, but it's got some more pressure. This is headed down. QQ hitting new lows. This may go red. SPY is now even. SPY just went red. The S&P just went red by just a touch. All right, so I want to look at the 5-minute chart on QQQ. So the key level to watch is going to be like 342. If we end up going below 342, then that's kind of that trend shift of, okay, now we actually made a lower low compared to yesterday. This may signal more downside potentially the rest of the week. Again, though, my anticipation for the rest of the week, to be honest, is pretty flat. I don't think we're going to see crazy moves. Maybe tonight, but then after tonight, I think it's going to be kind of like it is what it is, and it's going to do its thing, and it's going to be fairly flat, in my opinion, because of how volatile things have been this week. And usually you see these kind of crazy volatile times. These are easy money opportunities just to bleed out option premium. So a lot of these, if you're buying options now, they're going to have good value, because even if they're out of the money, they're going to have some value because, okay, it's been so volatile. But tomorrow, if we all of a sudden flatline, right? Let's say whatever we open up at, who cares? And we just flatline. All that's going to happen tomorrow is you're going to see some just bleed out of your premiums. Like whatever premiums you got, they're going to bleed right out. So that's the danger of holding options like on volatile weeks, Thursday, Friday, after, big moves up and down, right? The rest, or, prior in the week. It's just such a risk in terms of that. I personally don't like doing it. So I have some that I'm going to, actually, I only have one left for this that I have. I have one option left this week that I can probably dump, and I'll probably dump that before the close today. But outside of that, though, that's really it. I don't want to say necessarily get out, but again, also if you look at Home Depot too, what do we got? We're at like $7, $8 off of even just going to the money. You got to get 350. So you got to break yesterday's lows, and you got to pretty much pull into Monday's range for you to be, green on the. I'm not sure what your average is, but like for you to even be like close to green on those, because break even's at 350 by the end of the week. So you got 2 days to hit 350 just to break even. Chances of that, I say, are highly unlikely, even though things have been volatile and now the market's decently red. I don't know. I'll see how things close up today. I would say I wait till the close today and see how we close up. If we close super, super nasty, give it one more day. But if we start chopping along tomorrow and it just doesn't move, and you're kind of waiting for a pullback or waiting for more downside and we're just not getting it, I'd get out, because you're probably not going to get that. You're probably just going to get a fatal decay, time decay killer, bleed out tomorrow. Powell says he's inclined to raise his PCE forecast by a few tenths. Wow, this is coming down. Market's come down quite a bit off of that move. That's pretty nuts. From that 444 down to 432 on SPYs. Pretty big. I mean, pretty big range. We had a $20 range from the lows to the highs on Monday. And now today so far, from the highs to the lows, we've had, let's see, what is that? About a 2.5% drawdown on the S&P from the highs. We were up a lot. And now we got, what do we got? What is that, like a $12 move? Pretty nuts. $12. It's not 20. It's not Monday, but it's pretty close. It's pretty wild as it is, right? Let's see. Yeah, those 445 calls, I'm glad I sold one of those into that pop on the initial reaction, because those are probably they're going to expire worthless. They are now 110. I don't imagine if we close down here, if we close under, like, if we close red, I don't imagine these are going to have more than $1 value. So I'm probably going to get out of that relatively soon, just to salvage $100 on that last contract. My mistake on that was kind of, well, I don't want to say it was a huge mistake, but I bought SPY calls for this Friday on last Friday. It ended up working out because I was able to average down on Monday, and it ended up working for both. Two of them I sold for, decently in the green on my average. And this last one I'm going to end up selling, for red compared to my average. But like, if I had waited and played it Monday, and of course, hindsight 2020, if I had waited one more day, Monday, I could have got a much better average on those things. And the range on those was like from like 80 cents on Monday up to like $5. So that was a wild range on those 445 calls for this week. Now, obviously, they're probably going to expire worthless unless we have some miraculous recovery, which I don't think is going to happen. Same thing though. Powell said again, there's a risk inflation will stay higher longer than expected. Again, the same kind of thing we've been hearing and he's been saying for a while. Powell is moving away to substantially less accommodative and in time non-accommodative policy will be part of bringing inflation down. DraftKings, I wonder if DraftKings has pulled down in this. Is it in that range? Oh wow, it's plummeted right through that range. Look at that. For a possible bounce zone, we were looking at this range right here, but now it's plummeting through with the market. So sometimes you just can't fight the market, right? So now DraftKings, I would say right here, $20. $20 is kind of the next level. It was kind of the highs of Monday, kind of the highs yesterday. We just popped over that yesterday. And so $20 or so, we'll see if that can firm up as possible support. But again, in the current conditions, it's just like you want to wait for a little bit of market support too. So if the market starts to firm up and calm down, then maybe that's a better idea. But, you're looking for, I guess, a bounce right off of this 20 possible level, which we'll see if that even possibly holds up. Look at that. Look at how wild of a move. So I'm glad I sold that. I can re-add these. Look at these. I had LABU calls for these are March. These are plenty of time. I sold one of those for over 100%. And now I'm still up on that, but now I can probably get that back. So what are these at? I have a 210 average and they're going for like 260 by 285. So if this comes down some more today and tomorrow, I'm probably going to add that contract back and play it again. LABU is the 3 times bull ETF for biotechs, which I think biotechs are going to have a really nice bounce. So I like that play a lot. Hasn't gone below yesterday's lows, but it's leverage. So, take that into account, obviously. SPY is down now almost almost 0.75%. The NASDAQ is down about 0.5%, and the Dow is down roughly about 0.75% too. So pretty wild. Pretty wild action, honestly. Pretty wild. I thought for a good bit, though, that we were probably going to hold up and finish green, and it was going to be kind of like a nothing burger. We're like, okay, like we popped up initially, and then we kind of had this volatility right here, and I was like, okay, we kind of been bouncing around. Wouldn't be surprised if we just like close at like 440 on SPY. We're going to close like $9 lower than that, which is nuts, and maybe even more. I mean, we still got 50 minutes to go. We may have a bigger down day. Here's a bigger picture. I don't know why we have this massive wick right here on S&P. It's just like, it's super weird, which is why I've been liking to look at QQQ, because the chart just looks visually a little bit better. There's no wick like that, just like an error on the chart. But look at this coming down. Now we've broken below yesterday's lows on QQQ. So that's a clear trend, shift, right? So we were holding higher lows and now we're not. So now we have broken below yesterday's lows, or we hit down just to yesterday's lows. If we close under that, it's not necessarily a good sign for the rest of the week, but my anticipation is that the rest of the week is going to be quiet. I would think, but we'll see. Let's see. I think it's a possible idea for a bounce into the close too. Then again, I don't know if I want to. You don't want to. I'm not interested in too much in fighting the strength to the downside we've been seeing. So new lows again there. I think this is now under 442 is kind of a gauge based on yesterday's lows for the Qs. Tesla has earnings this afternoon. Oh yeah, they do. Tesla, this is AT&T getting crushed today, down 9%. That's pretty wild. Tesla today has earnings after the close. Let's look at Tesla's chart. How is Tesla looking? Straight down, but Tesla has this support right here. Well, actually, it's $900 is key on Tesla. I like that $900 area for a bounce back, although not right now because you have earnings and all that craziness with the market right now. I think it's a little too volatile, but $900 was historically, or at least chart-wise, a level that I liked. We dipped below on Monday and closed above. So if we can close above, if we keep closing above 900, we're still solidly holding that support. But the question will be how the earnings is taken out. Again, we can have good earnings and the stock drop. I mean, it just depends on the sentiment. I don't think the market's going to help right now based on how the market is unless we close stronger. Market doesn't seem like it wants to help Tesla's case because a lot of it's sentiment based. It really just is. Sometimes, at least as of late, you've been seeing stocks, good earnings, bad earnings, this and that. It's like, it doesn't matter. They're going to they go up and then they go down, and for like almost apparently no reason. There is reason, but like, it's like, oh my gosh, like why? Why is this thing down this much, or why is it up this much? It's pretty nuts. So SPY is down 0.5%. We'll see if it wants to make a jump into the close. I've been seeing people like to play the TQQs and the SQQs, S, 3Qs, T, 3Qs. These are the leverage ETFs. So if you want to play QQQ, but you want to play with leverage, play these. Now, let's say if you play options, so the spread's tight. The spreads aren't that big. So you can play, if you play options on these, if you like playing options on QQQ, you could technically play options on like the TQQQs or the SQQQs. TQQQ leverage upside. So if you think that tech is going up, you can buy TQQQ. If you think tech is going down, buy SQQQ. They could also be used as hedges into whatever market conditions. If you're short, long, whatever, they can be good hedges as well. So, all right, Powell, some more quotes. He's still going. Powell says, I do not expect supply chain issues to be completely worked out by end of year, but I do expect progress. We are not making progress overall on supply chain issues. We are not making progress overall, but he expects by the end of the year to make progress. Okay, interesting wording, but whatever. I wonder if I should add one more of these. Should I take one more? These are now down. I might snag one more on these guys. These are the 500 calls on SPY, and just hold 3 and just forget about it for the next 3 months and see where we're sitting at on SPY. Buy this dip without any fear, and that's kind of the idea. That's generally how I like to be. because I think I've seen a lot of sentiment shift just across like social media in general. Whether you're, Twitter, YouTube, whatever, I guess you can use to gauge sentiment. I've just been seeing a lot of sentiment shifting bearish as of late, which, it's not whatever. But usually when you notice that, usually, the market tends to go the other way. It's like two steps ahead. So when everyone goes bearish is finally when we start seeing upside. And it's like when everyone goes bullish is when we see, pullbacks or downside. So I'm kind of curious to see how that plays out and how that sentiment shift or gauge shakes out over the coming, days and weeks. I think a lot of people think a top is in for, at least, the near to midterm. I don't know if I necessarily believe that. It really depends on how things play out in the next. I think it depends on how this gets digested over the coming days and weeks. If we start floating higher and kind of just building back to the upside, doesn't really matter. I think we're going to probably go higher. But if we kind of chop around or we start trending down or making, we drop below this week's low next week or even the rest of this week, then that's definitely a sentiment shift, I would say. Powell says he hasn't made decisions on size of rate interest or interest rate increase or move. We are aware this is a very different expansion, is what he's saying right now. Alrighty. Well, cool. What else is going? Anything moving here? How have these been? Let's see if the top gainers have been affected a little bit with the market. But we got EBON, kind of a barcoder. It's a slow mover, but it's been kind of grinding up today. And it pulled back into VWAP and then held VWAP or held over $1. And now it's bouncing a little bit again. It's up 32%. So it's the number one gainer. Again, number one gainer today, but it's really, we haven't gotten crazy number one gainers. Like our number one gainers have been, 20, 30%, which is like cool, but like, whatever, who cares? It's been kind of the nature of that. Pretty boring, I would say, in terms of these number one gainers until that changes. I mean, that's next week. And maybe people thought that was this week. And then it was like, oh, the market pulled back. And it's like, oh, now it's next week. Who knows? We need a small cap runner to go, I don't know, 500,000%. And then that changes the tide in small caps. Let's take a look at some of these things. Tattooed Chef has been a beaten down name. Look at Tattooed Chef's daily chart. Look at this thing. Insane. Like this thing has just been whacked. Just the past couple of months, whacked. It's down from the latest spike. Now, of course, I know it's a spike to the lows. It's down over 55%. Jeez. From just going back to when it kind of started to consolidate after that spike from 20, it's down 45%. Literally since the fall, not even that long ago. It's pretty nuts to see some of that stuff. I'm pretty surprised at some of that action. XELA was one that was holding up nice, and now it's no longer, right? Yeah, this is plummeting with the market. But now I think this is a good one to watch in the coming days and into next week. If XELA can kind of I don't know, we'll see how it does. If it can kind of hold up, let's say it holds up on 50 cents, or it's going to take some time. You got to let some chart history develop. But if it doesn't fall back down sub 50 cents or sub 45 or back down to 40s or 30s, if it doesn't do that, I kind of like that as a long, because a lot of people were on this a while back. If we go back to FinViz and look at XELA, short interest or short float is only 5%, but I think there's a decent amount of people it was a short squeeze candidate back in here, or was a short squeezer back there, where look what happened, right? So here's the same thing. It had a curl, it popped, had a 2-day span where it ran, which is essentially, the past 2 days here. It pulled back, but it pulled a higher low, and then it started to hold up, and then it had the secondary run from just under $2 all the way up to 5+. So I'm kind of thinking that to some degree something similar could happen. And it's, I guess somewhat predicated on the market. If the market's nasty, then okay, then maybe that's not going to be the best, conditions for this thing to kind of bounce and run. But if the market's not too nasty, I mean, I don't know. I think this could be a bouncer, or if the market firms up, small caps maybe start firming up next week. This could be one to watch for a momentum, I guess, swing trade play on a small cap. I don't generally take too many of those, but that was what was working at least the past couple months. I wanted to do more of them, but then we've really been seeing the market pulling back. And so you kind of need the market to stabilize a little bit. But maybe this also sets us up for like a really good time where if the market is kind of trashy in terms of like the overall S&P and stuff, and people kind of get tired out, or it starts just, kind of slowly chopping around, downtrend, and we're not moving higher and higher and higher, and we don't have a lot of opportunities in the option world. If that's the case, then this could be a really good sign, or a really good thing for small caps, because go back to, historically, right? At least from my experience, when the market isn't that good, where do people go? People go to small caps. The market's been so volatile and so on fire that there's no need to go to small caps when you're getting $12 intraday moves on, or now we have a $14 intraday move on SPY. Like SPY has gone literally has made a $14 intraday move in the past, hour and a half. When you're getting that type of action, who cares about small caps? Just play options. But when that changes, when this doesn't happen anymore, and we kind of stabilize, or the moves become less and less, which will happen eventually, then that's when I think small caps, that's when a lot of people will filter back into small caps. But there's been no need. There just hasn't been a need. Let's see. Powell says he's still going. It's pretty crazy. We were able to stave off collapse of financial system. That's what he said last. I would say an idea is SVXY. How's SVXY looking right now? This has come down. I think you could have got it low. Yeah, you could have got it in the 40s. This was recovering nice. I like this, or like a UVXY put play. UVXY under 20 is ideally what you want to see. But a UVXY put play, let's see, we can look at options on this. I would go out to maybe like mid-Feb, so go out like a month, a little bit less than a month, like 3 weeks is like February 18th. If you go out 3 weeks, what are these going for? If you went with $20 puts, you're going to cost you almost $6. That means it needs to be down to, that's probably not worth it. That needs to be down to $14. I mean, yeah, it probably could happen. It was almost at sub 14 not that long ago. So I kind of like that idea, to be honest. Not leveraging up and down, holding. Yeah, I think that's that's personally how I'm playing, my current longs. I'm literally not, I don't care. I've stopped really averaging in on, I made the mistake on the small caps. I guess the market conditions change and it is what it is. Going forward, I have a new strategy, but on my current stocks, I have no reason to sell them. I have no reason to sell them at the lows and in a weak market environment. So I know what I'm holding, and that's just my strategy and plan. I don't think it's for everybody, but going forward, yeah, was I going to play things the way that I did? No, because I kind of got caught up in a time where the market was a certain way for small caps, and then it turned a certain other, and then turned in a different direction the past couple months. And I got caught into playing the strategy that was very, very lucrative during the 2021 or 2020 and 2021 cycle, whereas the strategy that was very, very lucrative in 2019 and before that was like was kind of a different ad strategy. And so, yeah, I kind of got caught in a time where like the market changed and I had to, adapt to it on the fly in a sense. And I got caught with more than a couple positions that I obviously would like to have better averages on, or would like to have a little more cash, but I'm also just not going to sell them, down at this low, because I know what I'm holding. I know the value that these have, and I know the companies are actually growing despite the stocks falling. So in those circumstances, I'm fine. I have no problem holding it. And hey, and will I get some of them if we get a pop on like one of these things, like, I don't know, like SON, if SON pops up and it only ends up being a 5% green trade, or if it ends up being a 10% red trade, whatever it is, I don't care. I'm just not going to sell them until I have a fundamental reason to sell them, because that's how I've been swinging the small caps lately. And in a hot market, I'll have no problem swinging small caps more technically based, but it's not a hot market for that, so there's no reason to be playing that way. So until that changes, that's at least my strategy based on the small caps right now. Just not going to worry. And then I have my airline. Let's take a look at the airline plays. Jets, they probably got hit pretty hard. Yeah, they just got cracked down. It's funny how things work out, right? It's like it lined up with resistance too. So we have this level right here at like 21 area, just over 21 on Jets. And we kind of were hovering around that all day. And then the market pulls back and it gets cracked down, and now it's down. So pretty wild. I saw some decent call buying for American Airlines out to, I think, March or February. I forget when it was. They bought they put a decent amount of money into $20 strikes. The reason why I believe these are still going to have really good trades is because you still have I'm going to get rid of this call, by the way, here, because these are absolutely going to be worthless, and just time decay is going to kill these. So I have this one left. I'm going to sell it at 77 cents and see if I can get out. All right, I'll put that order in, and that's it. That gets rid of the short-term calls. Everything else is longer term. I have pen calls out to 2023, so I'm hoping that got filled. Okay. So I was looking at American Airlines. The thing about this is that when it's going to happen, when we see those restrictions really loosen up, it's all sentiment driven, and so it's playing, number one, with the market, and number two, it's also kind of based off of current virus situation. And so we haven't come to a point, I really don't think just yet on American, where we haven't come to a point where it's like I feel really good about, these things are, there's the downside risk here is minimal in terms of virus concerns, but we're close. And when that happens in the next couple of weeks and months, these things are going to bounce, I think, really, really nice. And they did it last year very, very nice. Again, different market conditions, I understand. So if the market's very, very weak, that could minimize that bounce. But I think this is going to be a good trade going forward. So I have no reason to get out of those either. And I have JetBlue and Spirit Airlines. I have calls out to 2023, which are, they've been volatile as heck this week, but that is the deal. Thanks for your streams. I appreciate it. All I ask is a thumbs up. That is it. We don't have there's no Patreon down below. So I don't do that BS, that stuff. I mean, not BS. There's some good stuff out there. There is, but a lot of people, I'd rather not, or I'd rather just, talk through experiences, talk about what's happening live, see things live, and talk about thought process and stuff. And there's nothing to pay extra for that, in my opinion. So that's how I do it, and that's what I'm, going to be doing, and that's it. So here we are. Mesa. Let's see these Mesa calls. These are going, the spreads are too big, 75 by 90. So I bought one of those yesterday. I don't really feel a need to buy another one of those today. They're cheap, though, if you want them. The Mesa calls out to July. Kind of an airline bet as well. Those went from like $6 to 17 last year in like 2 months, around March. So around virus, I guess, concern loosening, if you want to call it that way, if you want to say it that way. Powell just said asset prices are somewhat elevated. That's what he just said. So we hit a new low on SPY a minute ago, 428.86. That's pretty nuts. I am surprised, number one, that is where we are, but I'm also, that's insane. It worked out, honestly, just kind of how we literally played it. So this low of the day, when we fell below the low of the day, right, you could have looked at puts. We came back up a little bit, but couldn't break back above, and then boom, that was the time to either add to your position on puts or stay in and not get out until we got back up over this 437. And then now look at how weak it looks. So the question is now going to be on let's look at QQQ. What happens the rest of the week? We're kind of hovering around that 342, the lows of yesterday. If we bounce into the close, that's a good sign. But if we don't bounce in the close, we could see more low, or we can see lower. Even a test back down to Monday's lows is not out of the question. This week or next week on the Qs, I would say. Yeah, I mean, it's trying to bounce right now, so we'll see how things finish up. And, for all we know, we can finish green, to be honest with you. Once Powell leaves the podium, possible bounce. That's funny. I wouldn't be surprised. Everyone's like, okay, Powell, you're done. Get out of here. Now let's go. Let's run it up. It'll be hilarious, though. All right. Labu. I could probably think about adding another one of these. It's at the lows of yesterday. It's really appealing. It really is. It really is. I'm gonna add it. I don't know. We'll see. Let's give it a few minutes and see how the market kind of firms up. And if we want to add something, I have 30 minutes to do it. And obviously I'm not paying as high of a premium as I would have been paying, 2 hours ago or an hour ago. So I'll give that a few minutes to think about if I wanted to add anything back that I sold today or whatever into the close. I would say if I had to just make a bold, I would say yes, because I just don't really feel like we're going to see more lows the rest of the week. If anything, I think we'll just see a flat line or more of a flat line. I don't know if I would say a bounce back, but who knows? Maybe if we bounce back hard to finish the day, I don't know if the market closes. If the NASDAQ is almost going green again, let's go back to QQQ, by the way. Here's QQQ. Oh my, we're just going straight back up. It's trying to. Now it's green. QQQ is green. So here we, this is back to the craziness of volatility, right? Back to the same deal. Let's see. Look at that bounce. Look at that bounce. Now does a SPY want to do the same? Look again, right? SPY hit under 429 5 minutes ago, less than 5 minutes ago. And now it's at almost, 433. I mean, nuts. But I guess, could you have kind of timed that? Yeah. Why? Because SPY, you could have looked at that and it was kind of coming into yesterday's lows. So it kind of honestly was pretty close to yesterday's lows. You could have risked it to yesterday's lows, and QQQ dipped just below yesterday's lows, but then it held up. So look at that bounce back on the Qs. It did dip down to just under 341, and now a $4 bounce on QQQ. Almost a $5 bounce. DWAC be playing with me too much. Let's take a look at DWAC. I never got in. Oh, I did. I did trade it on the initial run up, but yeah, it's playing with the market. The market's messing with it a lot. It kind of was looking decent, like it was kind of building higher lows, and it did dip briefly below yesterday's lows. So not a great sign, but it's trying to bounce again here. It's trying to kind of hold up, or at least a little bit into the close. Let's see if it can hold up if it gets back up to $70. If the market finishes strong, it probably goes to $70. Yesterday's close on DWAC, where was that? 68.98. Could easily go green at least. I would think if the market's got to go strong. I mean, SPY got 30 minutes. SPY could go green like easily. No questions asked. Easily could go green. That green level is going to be like right here. This little dip that we saw right there. It's about 0.25% off. We can easily go green on SPY. But again, like we were talking about too, if you have a core investment thesis, right, behind a trade or investment or, a stock, right, and you think it's undervalued or underpriced based on the current conditions and whatnot, or just based on, fundamentals or based on whatever you believe, right, too many people try to time things up and down. And yeah, could you have made a lot of money on this volatility? And do traders and day traders do? Yes, they do. It's something that I've honestly been doing or been trying to do more of. I haven't really this week. I've just added to my swings because I just see more value in LABU, for example, was a killer swing. If I just played that for a day trade the first day that I got in, I could have made 25%, but I was looking for 100% or more. And we got I scaled a third of it out at 100%. And I could have added back, but I was looking for it to come back a little bit more, and I'll probably just leave the rest that I have for now. No need to add those back. But again, if you're going to mentally drain yourself out, it's just not worth it. It's as simple as looking to buy the red, number one, or number two, as simple as dollar cost average in, right? You see a stock you like, it's at 15. You see a support at 13. Okay, I'll buy some here at 15. If it does drop down further, okay, I'll buy another chunk at 13. And if you play it that way, to be honest, it's a lot more effective in my view in the long term than if you're trying to jump in, jump out, jump in, jump out, jump in, jump out. You might nail it a couple times, but you'll also find yourself sometimes, like today, for example, right? If you jumped out, yesterday because you were worried about today in the Fed, well, and you're like, well, the question becomes, when do I get back in? And everyone's always going to be freaking out. When do I get back in? When do I jump back in? And it's like, that's always the question you're going to ask. And like, maybe today, after all of this noise intraday, we might finish flat. So like, at the end of the day, like nothing happened. Essentially, like, your portfolio was up and then it was down and then it was up. And it's like, if we finish flat, that's it. Like, it's just all this noise gets ironed out. It's fun. It's fun to see, and it provides opportunities, right, to snag stocks that are overvalued to potentially short when things get crazy to the upside. and for undervalued stocks to go long on these dips or when things go kind of down to the downside, right? But outside of those opportunities or buying or selling opportunities, the intraday is a lot of its noise on a long-term thesis or a long-term investing plan or strategy. It's just what it is. Take Tesla is bonkers. Let's take a look at Tesla. We got some interesting stuff coming into the earnings. We can probably stay on. Wow, Tesla went green. I mean, it gapped up a lot. So, you know, it closed roughly where did it close yesterday? Previous closed at 918. So it closed down in here, and now it's at 930s. Yeah, we can watch Tesla into the earnings report. We'll stay around for that reaction. UK is considering deploying troops to Eastern Europe. Some of that news going on. Well, that's another one of those risks of overnights right now. If you're looking at short-term overnights, a lot of that Russia and Ukraine risk right now is I guess if we get some crazy news out of there overnight, that could be a danger. I don't know how much that really will affect the markets in the long term. It depends, obviously, but actually, if you look at historically speaking, markets tend to go up during times of war. Now, I'm not sure if we can really go that far to say that we're looking at war right here, right now, but they tend to go up during times of war. Yeah, volatility, of course, but historically speaking, that's what you'll see. Look at Tesla. That 900 played off as a really good area for a possible dip buy opportunity on that Tesla player for a scalp intraday, trade. So that was nice. Or that could have been nice. We have those. I don't want to add to those just yet. I probably will just keep what I have on the SPY 500 calls. I don't know. What's UVXY at now? Because this is a volatility. Let's see if we get that volatility melt. Right. This is pushing back up. Hit 19. This could be worth a shot. Let's just see what the options are for this week. If we played this, you could. I wonder if the spread even makes sense. Let's look at that. Let's do that. I'll take it right now. I'll take a spread. I like that if it makes sense. Let's just look at the pricing on these. I like a put spread here. $20 or so is what I kind of want to see. Like right here. Let's see if I can get this order entry pulled up. Okay. No, it's not the right one. I want this pulled up, order entry, not SPY. Let's get rid of this. Let's get rid of this guy and we'll jump over. Remove order entry, and then let's go to view the order book, not the order book. Remove the order book. I just want to get the order entry page. Here it is. Okay, pull it back, overlay it, boom. Go to the graph. Okay, so I would be looking at this as an idea. So what is this? The UVXY this week put spread. This is a debit spread. If I was to go with one contract right now, I would be risking $37 to make $13. I could probably widen out the width of this. Let's go with $1 width, 1950 by 2050. I kind of like that. So I'd make 25. I risk 75. Is that risk reward worth it? In my opinion, do I think that UVXY ends up below $20 this week? I think it probably does, but the risk reward may not be the best there in that situation. So I'm not sure a huge fan for paying 75 cents. I don't know if I necessarily like that, but I kind of like a UVXY like melt off the next 2 days. Not necessarily thinking that the market's going to just bounce right back. I'm more so thinking that the next 2 days we're not going to do much. After how volatile things have been. That's my expectation. I just don't think we're going to do very much. On SPY, QQQ, and all that stuff, I don't think we're going to do much at all. Could change though, but we'll see. All right, go back to this. Let's take a look at how the overall markets look. Now we're seeing a change here. So we were seeing a lot more stocks advancing. Now we're seeing way more declining today as things have gotten a little weaker into the close. 71% declining versus 25% advancing, and we're still seeing a lot of stocks hit new lows. 422 stocks hit new lows, 81 hit new highs. pretty crazy. And if we go lower, we could see even more new lows, even 500 plus stocks hitting new lows if we close towards the lows of the day. I don't know if we will, though. We may just kind of bounce or try to consolidate in here. Look at the volume. Look how crazy this is, though. Look at the volume on this chart. This is SPY. So the FOMC minutes come out, and we go from trading the minute prior, we go from trading 175,000 shares to trading 1.8 million shares of SPY in a minute. And we've held up pretty well, honestly, considered the rest of the afternoon, all considered. So, will this be this? We're kind of building higher lows into the close. Let's see if we can hold that trend. Here's your current trend right now, roughly. Off of the wicks, not the best trend to hold, but off of those wicks is what we're looking at. And this is the 50 SMA. I don't like to use it. These indicators, I don't use them on the 1 minute chart or the 5 minute. The only thing I'll use on those time frames is this white line. That's the VWAP, volume weighted average price. That's the only indicator that I like to use on the short term time frames, which means 5 minutes or less, really, for me. I guess you can use 10-minute charts too, or 30-minute charts, whatever you want to use. But I don't care for. I really don't like to use a lot of indicators. I keep it very simple as possible is how I see it. Tech earnings, no volatility. Yeah, we've been getting tons of volatility, but I guess that's true with Tesla coming up. Do you see a volatility melt? I guess maybe that could be a player in less volatility there. Let's watch Tesla into the close here and see how it plays out. It's kind of playing with SPY, a very similar kind of movement to SPY. Look how much volume was elevated since the FOMC. You can see a lot of people were just very skeptical of jumping in or jumping out or whatever. And now I think what you're probably going to see is that craziness reaction, and then that gets, I guess, melted away in the next couple of days. The rest of this week and into next week, we'll get a better feel for the overall direction. I believe bottoms are very much could be in. That's my, I guess, hunch. But, again, it doesn't. They could drop lower tomorrow or Friday. We'll see. My guess is that we don't move too much tomorrow and Friday, but who knows? There's been so much volatility and so much craziness that if you're so excited, usually what happens is if you're so excited about, I'm going to take advantage of this tomorrow, it's going to be killer, I'm going to make so much money, Tesla's making crazy range, SPY's got crazy range. You come into that expectation on Thursday and Friday, the days before these, the last 2 days of these options before they expire, on Friday, you come with that mindset and, you're expecting moves, you're expecting craziness, and you're not going to get it. And if you get in positions and they kind of don't go your way, or they're kind of sitting flat, they could be going against you very, very quickly because of time decay. So that's the cautious. What I would like to do, or if you're looking at trading options on a Thursday, Friday, sometimes even Wednesday too, go to next week. So go to next week's option contracts and play next week. Give yourself some more time. And sometimes that time decay won't be as volatile. Obviously, if you're playing a stock or an option contract and you're looking at things here and saying to yourself, okay, I see this setup is going to happen. I think that SPY is going to break out, or I think that, Tesla's going to go here, or Apple's going to do this or that, right? And the setup is presenting itself. If you're playing this week's expiration option contract, well, it's crazy because if you play this week, then you can make 50%, 100% very, very fast, right? But if you play next week, people don't want to do that because what ends up happening is, okay, if you get the move you're expecting, you might only make 20%, 30%, maybe 40% on that move or the option, right? People don't want to do that because they see the 100%. They see that if the problem is if your sizing isn't in line, it doesn't make sense. I personally, I see it like I'd rather go heavier on something that's less volatile than go smaller size for something that's more volatile, if you know what I mean. It has some more kind of short-term factors at play. If I think Tesla's going to go up tomorrow and I think Tesla's going to make a move, let's say I'm playing a support at let's say $900, and I think Tesla's going to bounce from 900 to 910. There was a bounce from 906 to 925, 929. Oh, that's a nice move. If I get something similar like that tomorrow, right? Playing that on a short-term option could go 100% or could go 50% very, very fast. Playing the next week might only go 25%, but you probably could feel more comfortable going with heavier size. So it comes down to your preference ultimately at the end of the day. If you like going in heavier size and playing higher quality setups but playing less risk, it's up to you. Apple tomorrow, all those mega volatility through. Yeah, don't short. Yeah, I don't necessarily like it. If I had to take a trade, I would say I would look to short the volatility indicators, just because I believe, number one, I believe the bottoms are in from this week, at least for this week. I believe the bottoms are in, and I also believe that we're not going to get crazy moves on SPY the next 2 days, but we may. Not a huge hunch trade, but you could probably play that and short volatility out a few weeks, few months, and take a starter position now. And if it works out your favor this week, just take the profits, or into next week, take profits. If it doesn't, you can probably add in, add it higher, if you're going to short volatility, add it higher next week or whatever. If we go higher, you can play it that way. If you wanted to get in on it, if you really felt like you had to get in, I guess. So if you were play like February or March, UVXY puts, and they're up 25% tomorrow, by Friday, because we get a big move up in the markets, or we kind of stabilize and that pulls back a lot, then yeah, you can probably take profits on that and then look to reload if we get more volatility, or just if things go the other way and UVXY goes over 20 again, we'll then wait about a week or so, see how things play out. Maybe you can add a position up at like 22, and that could be a better idea if you still believe that trade makes sense. But that's true though. As true though, the volatility there with all these tech earnings is pretty nuts. I mean, after Microsoft, I feel like the sentiment is a little bit better, and I don't think you're going to be seeing as much just immediate selling. I felt like if Microsoft stayed down, and today was I think if Microsoft stayed down yesterday, today would have been a red day in the market, and it would have been pretty bad. Potentially with this Fed reaction. I don't know. Potentially with that Fed reaction, it could have been pretty bad. Look at Microsoft, by the way. We had a line here at 305, 306, and where did we hit? Today, we broke above briefly at the open and came right back below. We got back up there again today, and that could have been a really good short opportunity for the downside. That was a really nice short. If you shorted this thing up here, obviously, the whole move is 4%. Maybe you got the move to VWAP. It's a pretty good 1% plus move. On the options there, you probably could have gotten a nice 25% plus move, I would think. But Tesla's, I guess, the main focus. I'm not sure if does Tesla have earnings? Are they coming out right at the bell? I'm curious. Probably going to see Tesla be more volatile towards the end of the day, but towards the next 15 minutes. But I wonder if they're going to have, if it's similar to Microsoft, where they come out at the close and then they have the conference call, I guess, following up after. Earnings expected. Tesla's expected revenue of $16.8 billion and EPS of 2.33. I'll write that down and we'll just see if we get that. On Tesla. Tesla earnings. They're expecting a $16.8 billion revenue. It's funny. I'm not sure if you guys noticed the same thing, but I was up in New York this past week, last week into the weekend, and here in Texas, I guess it's you got a lot of people coming from California and LA and stuff, I guess now, moving to Austin and stuff. But there are so many more Teslas on the road here. It's not even close. It's not even funny. It's like if I had to give a rough, for every 10 cars I see, I'd say here, that's probably not the best way to say it. For every 100 cars I see, you probably see 10 to 20 Teslas almost now, it feels like, 10 to 15 Teslas on the road down here. Just maybe that's just because I'm seeing them and I'm making it more. Maybe like 10. Up in the Northeast, for every 100 cars you see, it's 3 to 4 are Tesla. There's a significantly less amount of Teslas up there, at least from what I can tell. But I don't know. I guess maybe warmer weather, is that an effect? Does that have any impact? Or people just come from California? Or I guess also Tesla's building their plant or whatever, their production facility in Austin. So I guess you get a lot of people just from Tesla. I don't know. It's it's kind of weird. Okay, I'm going to put these EPS numbers in on my thing, and then we'll have that 2.33 EPS. So 16.8 billion revenue, 2.33 billion dollars earnings per share. 2.33. We'll see if we get that on Tesla. It's been kind of fun to see. All right, so SPY into the close is kind of trying to hold that trend, and maybe it's not going to hold that trend. We'll see if it does. That's kind of wicky. It is building higher lows and building higher highs into the close. So we'll see if that trend continues, and it's probably going to be, I mean, look at how much volume. It's probably going to be volatile until the close, whether it's up or down. We can either easily see a move green, or we can see a move to down 1% plus on SPY. It's currently down about 0.25% as we speak. NASDAQ is roughly even, and the Dow is down about 0.5%. So the Dow it's funny. The Dow was, it's got some more pressure, obviously, today than everything else. The Dow wasn't up as much, and then it was down. Now it's now down the most. That could very well change. Now here goes that crack of that trend line. So that trend line's cracking now on SPY. Possible little drop here into the close. Well, let's look at we're saying XELA, and look at this thing. It did dump a lot, but it rebounded nicely. So it hit 60 cents, and from those lows, it popped back up 12%. That's pretty nuts on just the stock. That's pretty crazy. I think this is going to be a really good one to watch. Maybe this thing ends up just kind of holding 60 cents. Maybe that's the level, for now. I'm going to draw a line there at 60 cents as our kind of our key area. It was the highs from yesterday, and it held the highs from yesterday as today's low. If we hold 60 cents now on this thing, I would be watching for that to happen over the coming days and look for a possible secondary squeeze out, considering the market conditions, obviously a little bit too. Robinhood has their earnings report tomorrow as well. That's going to be a fun one. What's Robinhood at? Hood. 1246. It hit 1115 though. So, I mean, hey, this is cracked trend, right? So a lot of these stocks you've been noticing too have been cracking trend. So we kind of here's our trend, right? Past like day and a half, right? Building higher lows, and we cracked that higher low trend pretty substantially second half of today after the Fed. Discord down is trending. Multiple users report outages on Discord. I haven't noticed that. Although I'm not really actively using. I have a ton of alerts or like Discord notifications, but like that's just like in a bunch of groups that I just honestly don't even go into, and I just like don't clear it out enough, which is like some people are like super crazy OCD about that. I'm not. My email, if you go to my email inbox, it's got like 30,000 or whatever, like some thousand unread emails. I see them, and then I scroll through them, and if I'm interested in opening it and it's important, I will open the email. I just don't delete them. I just, that's just, maybe it's stupid to do, but that's how I always have been. So I know my girlfriend cannot stand that. She's got to go through and clean it out and delete everything every night, which like I just, for me, it's like I get so many emails every day, just like, I guess some of it's spam or like stuff that I don't necessarily need. So I unsubscribe, but like, I don't know. It's kind of crazy. Like when people look at that, they're like, what the heck is that? Like, I'm like, oh yeah, I guess I just haven't cleaned it out. Trying to hold the 50 SMA, I guess, kind of here on SPY for the reversal, but it's still putting in higher lows technically. If we can hold over 431.50, technically it's putting in a higher low into the close. 9 minutes to the close now, roughly. 9 minutes to the close. Pixie is an interesting one. I've seen people have been trying to momentum trade this one the past couple of days. How is this one doing? Pixie is a good one. Oh, wow. This is a good example, I think, right here. Pixie is one that, hey, it hit 83 cents, and off the lows, it hit up over 100% yesterday, but it didn't die. Like, look at the trend, right? This thing has come down. It held the 150s very, very well, and today it's been holding the 165 area very, very well. It's probably on pace or setting up, unless they have an offering or something coming up, which they could easily do. This could squeeze back out and go 2+ on Pixie. This is a good example, I think, of like one of those that has a pop, right? And it got a pop back at the end of December, pulled back, built higher lows, in the 80s, and then started to trend and hold the 80s and hold up, and then started to curl. And it's one of those that if you were looking to play this thing and you sold into spikes and then you rebought down into those, higher low dips, it's been a nice one. Rinse and repeat type of trader. Let's see. It's now up almost 13%, so it's made the top gainer list. Cost, I'm surprised cost is holding up there. A lot of memes have held up, and then they got sold off, hit $10 and got rejected at 10. LRMR Larimar Technologies hit $11. Like, so look at how thin there's just no volume, super thin. I want to see, like, XCLA, I remember was trading over 200 million shares a day back on the run that it had a while back. Volume on this guy today, it's actually up there. It's at 261 million. It's pretty good. It's actually a pretty good sign for small caps, at least. That's a good amount of volume. Whether it's a lot of algorithms or whatnot, at least there's volume there. There's liquidity, which people like to see at least. What else? Groupon is up a good bit today. What's Groupon's chart look like? Groupon, wow, that's pretty cool. It kind of has a good support right here at or it kind of does. Roughly like $20. And as long as it holds $20, pull that back into that range. It's been decent, but some resistance up here towards like 28, which we got above briefly, then we're pulling back. So we'll see how that one trends. But 32 or so is 31 is the 200 SMA. See, that's an interesting looking chart right there. All right, let's check the market into the close. Okay, here's SPY into the close, building higher lows. So, yeah, I guess higher lows are being put in. We're still down about 0.4% as we speak. The craziness has not ended though on these things. I mean, there has just been volatility for days. Look at that. Look at this candle now as we speak on the S&P and just QQQ. Everything has been making. I mean, we've seen it before, but for the amount of time that now we've been seeing it, for about a week or so, we've been seeing it. The intraday and overnight volatility on SPY, like, making a $10 move, like $5 moves on SPY are now like, okay, who cares? You know what I mean? Like, we're seeing $10 moves. We're seeing $20 intraday moves on Monday. That's nuts. And so I really think that until that calms down, you're still going to have pressure on a lot of small caps that are at bottoms. You're still going to have a lot of them under pressure. And unfortunately, until the S&P slows down, it's moves, or until the S&P goes and grinds back up and makes a push towards highs again. If it does, you're probably going to see a lot of stuff floating higher to a degree. And especially after this dip, if things do get, I guess, more favorable in the overall market, I would imagine small caps bounce a good bit too, because, they've been in a bear market for a while. And now as they've kind of been bouncing around and as the market has pulled back, if we see some stability in the overall market, I wouldn't be surprised if, people flock to small caps knowing that, hey, the market's starting to stabilize. These are beaten down big time, same as like biotechs. These are beaten down big time. They have potential for some big time moves. Let's look here, and that could be where a lot of volume floods into to finish out or to, move into, I guess, the rest of the first quarter and I guess next quarter or whatever, the first couple months of the year. That's where I would be. That's just logically how I see it. But again, it doesn't, logic doesn't make sense. Logic doesn't matter in the market at the end of the day, in the short term, at least. All right. So do we end up going green here? We're very close. We have 4 minutes left. We teetered on green like a minute ago on SPY. Now that dip now the higher lows are still holding up on SPY. QQQ is down about 0.25%. SPY almost about 0.5%, and the Nasdaq or the Dow down just over 0.5% as we speak into the close. So this may hold up and we may finish just red. And it's like, okay, well, after the gap up this morning and the whole craziness intraday, a lot of that noise ends up just flattening out to being pretty much back to where we were yesterday at the close. Hood tomorrow earnings. We'll stay for Tesla's earnings, I think, and as long as that comes out relatively soon after the close. Let me just go check over here and see if they have a time on that or if anyone knows. Okay, Tesla. People buying Tesla puts. Popcorn time for Tesla. We could pull Tesla. People are looking at 1,200. I'll pull it up over here on the main screen here. Let's just look up Tesla. Let's pull this bad boy up. Zoom her in. Oh gosh. Oh my. Oh man. There's some good stuff on the Tesla Twitter thread, I guess. Okay, I don't know. I mean, if Tesla makes a big move, I mean, they have, what's the weight in SPY? They got a pretty big weight in SPY, right? Let's look at Tesla weight in SPY, S&P 500. Tesla weight in the S&P 500. Okay, let's see. Top 10 stocks by weight. Let's just find Tesla. I'm pretty sure it's got a decent weight. It's number 7. Its index weighting is 1.5% of the S&P. Now, the thing that was really cool or really interesting about Microsoft is to look at Microsoft. Microsoft had almost a 6% weight in the S&P, which is why it was such a big deal when Microsoft was down and then went up after earnings yesterday. So Tesla doesn't have nearly the weight. So Tesla could tank 5% and the S&P wouldn't, I don't think it would matter that much. If Tesla was up or down more than 5%, then that may be cause for, I guess, movement in the S&P or whatever. So we'll see. We got a minute left until the close. We are potentially going to close green here. We're closing green on the NASDAQ. At least we're green on the NASDAQ as of now. Well, let's see how these numbers shake out in the next like 30 seconds. And we'll go back and check on Tesla's earnings. I have the numbers of what the expectations are, and then we'll see how the reaction is. Again, just because you beat or you miss doesn't mean the stock's going to go up or down necessarily, but it kind of depends on guidance and the future and projections and all that stuff. And it can be very, very interesting. All right. So we're honestly going to end up closing pretty flat a little bit. Let's see how SPY is going to close down just about 0.25%. Let's see. Yeah. So SPY ends up closing down 0.23%, down $1 completely. The NASDAQ closed up barely, up $2.82 on a 13,500, right? So not much. And the Dow closed down $1.50, or the DIA, sorry, closed down $1.50, just under 0.5% to the downside on the Dow. So honestly, after all that, we kind of ended up just back to where we were, honestly, yesterday in the after hours, or right towards the close yesterday. So we're not much change there. Okay, let's look at Tesla. Not Pixie, TSLA. Tesla's volatility here into the close should be nuts. I will pull up when we get the information on Tesla's earnings. I'll pull it up. This should be cool to see though how this plays out. I know a lot of people really don't necessarily like Tesla up this high, but again, it's been one of those stocks that just kind of defies gravity almost in a sense. And then they come out with the earnings and they just they come out with these delivery numbers and they're like, oh wow, it smashes it and this and that. Let's see how this plays out though. Nothing yet. I haven't seen anything yet popping up. I'm just looking at, honestly, I'll find it. You'll find it faster on Twitter when the people will just, link the ER on Twitter right there. And then where is Tesla? So it's up. It's pretty much flat in the after hours, not doing too much. It's built higher lows into the end of the day. It honestly wasn't that volatile into the end of the day. So it's pretty interesting. And the volatility is all going to come right here on the earnings. It's funny though how people were playing puts, calls, whatever on Microsoft yesterday, but they were pricing in a big move. Let's look at the options here on Tesla. Going to go to calls and puts, and I need to go to, why is this being weird? We want Tesla calls and puts. I don't understand why it's all being screwy. Okay, I'll reset that. I'll just reset this platform in a second, and we'll be back. And we'll get the option chain because they were pricing in like a 4 to 5% move on Microsoft yesterday, and the problem was that okay, that's cool, but if that's what's being priced in, broker platform is being super wonky right now. TSLA, Tesla stock. Let's go. It's up $5 in after hours so far, but I don't think the earnings have come out yet. Okay, here we go. Both. So Tesla, if you're looking at this Friday's expiration, 940 was these 940 calls were $46. So you needed essentially Tesla to be at 986 to be break even by the end of the week, roughly, right? On these. So that would be pretty nasty of a move, right? What's 986 from here? That would be from the area we're at right now, 986. Yeah, it's pricing in roughly a 5% move. So if you're in options right now, obviously it's Thursday, so there's still some time. If you end up opening up tomorrow and Tesla didn't move more than 5% up or down, if you're in calls, you want up, obviously, down puts. If it didn't go to 5%, then you could be just screwed. Like nothing happens. You end up like your options are going to be worth a lot less, or you're not going to make anything off that. So that's the challenge, I guess, on Tesla. That's the challenge, the downside of the option. You need a 10% or a 7% move by tomorrow morning, which you may get the initial reaction up or down, and then all of a sudden, tomorrow morning comes and it's like, oh, what happened? And then like Tesla ends up, giving it all back or reversing or whatever. Let's see. They should be coming out in the next few minutes here, right? And the conference call will be later on, I'd imagine. Nothing yet. Tesla quarter 4 earnings estimate from me. Okay. Go back here. Okay, it's up 1% right now as we speak. Some more action is being tossed around on Tesla. So well, here we go. Let's see if we got earnings coming on. It's like always that few minutes of just waiting until the earnings comes out. And then you're looking at the chart and you're like, wait a second, this thing is tanking or it's ripping, and then the reaction is the opposite, and it's like, oh my. Where's the S&P in the after hours? It's pretty flat. Yesterday was it just fell off a cliff. In the after hours, SPY just kind of slowly bled out, or kept bleeding out from the trend down that it was seeing towards the end of the day. All right, now we're getting some more volatility here. Tesla's bouncing around. Bouncing, but still I haven't seen the numbers. They haven't come out yet. Still not out. Nope, not yet. They should be out it's tanking. It should be out any second. Let's see if it drops below $900. Oh, it's dropping below the lows. They got to be out now. Okay, here we go. Tesla earnings reports. Let's see. Now we can fact check this in a second. So 2.54 earnings per share. Consensus estimate was 2.26. So that's actually above EPS wise. It is above. Consensus was that. Okay, here it is. Okay. Revenue so they beat on both fronts, revenue and EPS. Now, there's more to the story there, but they beat, and look at the stock just getting destroyed. It's down 5% now. Wow. Down 5%. So here you go. You're right. And I wouldn't be surprised if this is where it kind of we'll see the overall, I guess, fluctuation or reaction. Let's see if the S&P is moving at all. S&P, no, it's not really moving much. So Tesla doesn't have as much of a weight as, obviously it doesn't. We just checked. It has a 1.5% versus Microsoft's 6%. But you're going to need this thing again for those who are in puts for tomorrow. You still need Tesla to honestly go under 8. Honestly, you need 875 or less for you to really probably make money on that by the open. If you end up in this range between 975 and 875, those options are going to be they priced it all in. So it was all being priced in the option contract. So it's okay, cool. But, end up losing out or didn't make money on that. So I don't know. I mean, I don't like playing that stuff unless you really are if you're going to play it, right, play some deeper out of the money contracts up or down for an earnings. And I think we're in the time right now that no one really wants to play, calls. You play something deeper out of the money, right, for maybe a stock that's not as widely kind of traded as Tesla or widely talked about as Tesla, right? And you trade something or you buy something that's like, 10%, 20% out of the money. And that's where you can kill it on nailing an earnings like that. You're not going to kill it off of like a Tesla earnings anymore or like an Apple earnings unless it's an absolute complete disaster up or down. I just think it's funny for those. I don't know if it's necessarily funny, but under $900, we'll see how 900 is key. We did dip below. So below 900, we have 850 from Monday. So that's kind of our next level below $900 is Monday's dip. But we've actually closed over $900 very, very nicely for, let's see, we've actually pretty much closed over 900 since October. So we haven't had a day where we've closed under $900. Maybe here. No, I don't think so. No, we did. We closed at $899.94. So we did close one day, very like 6 cents under $900 on the 20th of December. So there's that. But we haven't closed under $900 now on the daily chart. So this is an after hours, so it doesn't necessarily count. We haven't done that since October of 2021. So now you're down 6%. Now you're getting into kind of like, okay, puts could pay here. Let's go look at the puts. If you bought Tesla puts, let's say you bought 940 puts, okay? Or even if you bought, let's say you bought 900 puts, okay? If you bought 900 puts, they were going to cost you roughly $28. Now, you could have got a different average depending upon when you bought the puts. They were going to cost you about $28. And now you need essentially Tesla to go to 870, like 3 or 870, 2, whatever, to make money, to break even. So your break even is 872 on those. Again, right? Look at this, guys. Where are we? Your break even by Friday is 872. We haven't gotten that low. So you're getting screwed if you're, for now. A lot can change overnight and by open tomorrow. Sentiment wise, market wise, all that. But for now, you need a bigger move down. So it didn't really pan out unless you're playing lottery. But again, you can't. It's tougher to play lotteries on these because they're expensive. It's not cheap. You're gonna pay $3,000 just to get in one contract of something like that. Is that even is that even worth a lottery for some people? For most people, probably not. So it's the ultimate. Tesla's the ultimate, screwball in terms of that front. All right, to wrap it up though, let's talk about how the day finished. So we finished up with 68% decliners, 28% advancers. We hit 500. So we hit 509 stocks at new lows, 81 at new highs, and we have a lot of stocks. Less than 20% of stocks are above their 50 SMA, okay? And less than 25% are above their 200 SMA. A more lagging indicator, but it's quite interesting to see that information. So that's how we finished up. My anticipation is honestly flatline type of move to some degree, or less, at least less range intraday across the S&P and the Dow and the NASDAQ. The next 2 days, again, with earnings season and all that stuff, it may change, but that's my anticipation.